over here. I never opened.
Step up, traders, time to roll. Number shaking down the scroll. Clock is ticking.
Oh, it's like they stole them so they could use them.
Stock market show.
I have a real thought that they actually only buy me Christmas presents, so that or presents in general.
It's something we've already reported, but we'll throw them in. Officials say that Trump's,
So that it's
officials saying that talking about Trump's security service leadership. It's the White House meeting with presidential safety protocols this week.
It's just been so like.
It's a stock market show where the bulls run wild.
Turn that on.
The first loud bell till the closing go. Ride that wave on the
Check 1, 2.
show.
All right. Do.
Got your watch list ready, got your game face on. When the spreads get heavy, he keeps you calm from the open road to
7175 718.
on the stock
I
market.
think that was hit. No, that wasn't hit.
It's a stock market show.
We definitely didn't hit it yet.
Run wild. The bears lay low from the first loud bell till the closing go. Ride that wave on the stock market show.
SPX.
Log on. Get that trigger pulled on. Trigger the trigger.
MOC. What do we got?
Trigger the trigger.com.
Moo. Top sells. VJPM, AAPL, UNP, IBM. Top buys, APD, GLW, BRKB, Misfit, and GNRC. We've got a big earnings week. We've got FOMC on Wednesday. We've got month end. Busy. On this opening bell, if you are don't be buying anything off. Don't jump on any swords. Please tell me, where's my camera? Oh, I'm having like nightmares here. I worked on my my office here at the studio over the weekend. Still can't find out what's wrong. Or I'm down another path right now on it. And good morning. Hope you all had a good weekend. I'm still having kind of wonky office stuff going on. I think at this point it's probably a 5080 GeForce GPU that's giving me problems here. I was afraid it might be malware at one point. It's not malware. So I think it's just like doing complex things and having things not want to communicate. Another issue that I have is I use external capture cards. So I think I have to upgrade everything here and move into PCI slot capture cards. They're not cheap. They're like $1,000 for one card. They're like, it's getting into like professional production kind of stuff. So I got to find one and get it installed this week at some point. Hope you had a good weekend, by the way. Is everybody here? Is this show on? I don't even know. Being serious. I'm in pain today too. I was pretty active this week. Like my like last week was all spring stuff for my kids. It's like after every show I'm going out to like this thing and that thing and this thing and that thing, and then over the weekend it was like that. Where did I go this weekend? I did like Friday I went to a production of Shrek with some really good actors. My daughter's involved in music and stuff, and she's crossing over into theater and things like that. And so we had to go do this thing with her, the things she does people with, and it was wild. And then Saturday went dancing, which was really nice. And then Sunday hiking. I'm in some fucking pain. I'm trying to get ready for the summer, and I'm feeling the age. I'm an old man. There's only so much I can do. Okay, so it's month end. We had, of course, over the weekend, there was a second, theoretically, a second assassination attempt on the president of the United States. No one ever wants to see that stuff happen. It seems like the SOH stuff is kind of deteriorating. We don't know what's really going on. Everything I read about it, I second guess everything I read about it. So let's look at pure price action at the moment, see if we can take a breather from hey, look at me, the White House kind of stuff. Now we're gonna try to take a look away from that for a minute. Coming into month end. Let's go over here and let's just look at where we are. Okay, we know that this is some sort of. Here, hold on here. Today is Monday, so we got a lot of crap to review. Bottom right hand side. Let me get rid of this for a minute here. Pivot points. Nope. Yeah, let's get rid of pivot points for a minute. And let's look at the month. So it's kind of ironic. This is a market that goes up, right? This is a market that goes up. Say it again. This is a market that goes up. So when you go up for a month, look at that. Look at that candle right there. Or let's look at it at a different perspective. You have a market that goes down for basically a month, basically, right? You get a market that goes down for basically, this is a 1 month chart. Month. And so we go back up, down, and then up. And what does a bear want from you? He wants back down again, doesn't he? A bear will tell you, if you go up, it must go down. If you go up at all, it must go down. And that is just not how this works, is it? And the more down you go, the quicker the destruction ends, right? The quicker you go down, enough, the quicker you go up, right? Or the chance of you going up is. And we had that chance one morning or one afternoon or whatever the fuck it was. I think we were sitting here on stream, and I was sitting here drooling to the side, and all I heard was Pakistan. And I said, oh, that's the country. That's the turn right there. Why is that? It's because they're a nuclear power. It's because they are probably the leader of the Middle East, even though people don't like to acknowledge it. One, because they have nuclear arms, and two, they have a lot of the trade routes in the Middle East into China and Russia. They control a lot of these overland stuff too, not just waterways. And they're kind of like they're not, I don't know if it's peacemaker, but they have the ability to be the peacemaker in this whole thing. So that happened down here. We ripped faces all the way up. We haven't stopped since, and we're coming into the end of this month. This month looks good, right? Do you think that they're going to destroy this green candle at the month end and all pour, oh, wait a minute here. I'm getting beeps here. Am I in trouble to do something wrong again? Oh, okay. Okay. Thank you, Jason. I appreciate it. Hank, I appreciate that, Jason. So I'm turning left again this morning. Got a little bit of. Hold on a second here. I posted the wrong charts. Thanks for that, Jason. I'll fix that right now. I swear I feel so left-footed right now. It's going to get better. I have so many changes going on right now that I feel very left-footed, but that's okay. It'll seem like magic before you know it once I get into the routine of all this stuff. Hang tight here. Hang tight 1 second here. Okay. So this is the month end. Or we're in month end. This is the monthly candle. I'm assuming that the bears want, to end the month of April down here. More than likely, not going to happen like that. More than likely, you're going to get that month end window dressing. It's not going to be huge window dressing. And you won't see the unclench until potentially it could be FOMC, could be the break of it. Or it could be month end to try to get those flows. I showed you the last two instances where we were in a month end with the same the same for sale month end for pension rebalancing, CTA selling. And in both cases, we came down, I want to say three. In one instance, we came down 3.5% to 4%, and one was 4 to 7. And what was unique was that it was relevant to the size of the squeeze up here. So like the 4% was on like the 4% I think was like 3.5%, 4% and like a 7 or 12%, 10% up move. And then the 7% was on an even larger upside move. And let's just look at this right here for the month. Well, that's 10.5. So some kind of a corrective move would seem appropriate, but the question that's larger than this is where and like what is the catalyst? And we haven't seen it from Strait of Hormuz. We haven't seen it from Vixpiration. We haven't seen it from OPEX with the freedom to move, and we now have two more plus some data. We have a lot of big data coming, econ data coming. We have FOMC. Well, first we have FOMC, then we have big econ data, and then we have the month-end triggered selling. So we expect at some point this week that there should be some kind of an unclench. The other issue here, too, is that we have not traded into where you want to put a roll on. So let's say you've been selling 7,000 or well, for where we are, hold on, let me just take a look here. For where we are here, selling the, we want to sell 720s, 725s, 730s. And the process to do that is usually what? We're rolling higher, which means we're on a high and people are chasing calls, right? So we have lots of demand. I want calls. I'm a degenerate. And then you've got someone like John L. that's like, oh, you want some calls, bro? And a high? Here you go. And they're selling you calls. And we're not there yet, right? We're still not in that zone to be selling the next batch of calls for the next month. So you would expect some kind of a high here. Let me get rid of this. Oh, wait a minute. I got to put that back. We'll just put it back here in a minute. So at any rate, you've got here. I want to show you this here quickly here. This is the monthly candle right here. I want to show you how low it is. I mean, this is pretty fucking low for sweeping a monthly low down here. Let's say at a monthly sweep, that's 653.81. That's pretty low for a monthly low. You could sweep. I mean, I'm gonna make the bears kind of drool here, but you could sweep this all the way down here and still be extremely bullish. All that right there. Still be extremely bullish. You know that they're drooling for it, right? And then on a weekly basis, let's look over here. And we're stacking up new weeks, right? New week here, new week here. And we're coming into month end. So you're going to get a new monthly candle. And that new monthly candle should be somewhere up here at 667.50 or 667.38. And also you've got 655.78 down here for the bottom of that candle, the bottom of this month, or is it even lower? Yeah, it's not quite. Yeah, it's somewhere in here. I think it's down here, 646. And then you're putting in this one right here. And then you put this one in right here, and we're trying to lock in one more for this week right here. This last one. And this would be 709.81. If you go to the day, I wish you go back to this week and just type in W's. Oh, we got them in there. They're in there. There's the W's here and here and here. There's a big gap down here. The bears want to close that out. They just want that juice, man. They want that equal. That ain't gonna get it, by the way. Well, maybe. I don't know that they'll get it. We're trying to defend 700 here, so let's take a look at this one here. 4 hour. Oh shoot, we're already into 9:30. Let's take a look at this. Here's the whole week ahead of us. And I'm assuming here that the Bears want somehow to they want to get underneath this, right? They want to unclench this on Wednesday, I'm assuming. I don't know if they're able to get that. And not only that, we got to go up there and sell those calls. So we got to go up here. And what are we trying to trade up here? Do you know? Anyone know what we're trying to trade? A failure of 720. And we don't have a lot of time to do it, do we? We've got like a day or two to get as high as we possibly can up here before we have to sell. Let's take a look at this one right here. Get this high right here. That one right in there. Oh, man. Think tighter. If they only knew where we need to trade. There's a big fat one right there. There's 17.5 or 1750 right here. And this is kind of where we need to go up here. Let's put, I deleted one for 12 p.m. right here. We want to crank this out by close today. Oh, wait a minute here. No, I want to see this today. Right there. That's what I want to see. I want to see a push up higher here to fail above. Let's go over here. Leave that right there. We should go vertical today. It's out here. Doesn't have to go down there. It has to go right here. There's the half hour. Smash that out. Hold on here. That pivot's in. We don't have a lot of time here. Hold on. This one right here. We'll give it till 4 p.m. We know it can go faster than this, but right about there. We don't have a lot of time here. Half hour. This sometimes, one other warning, just a warning for this morning. Sometimes on Mondays, what we'll do is we'll make an attempt to get up here. We'll get sent down here. And then we'll hit this like 1 hour down here and it won't take off until 12. But it could go vertical at 12. So just be careful of this in here being like our supply coming in. Like hedging first part of the morning. It's potential that we don't go up here. I would say be patient here. Just be patient. We're either going to take off right away or we'll stall and then we'll take off down here at 12 or 1. Just be patient right now. Don't do anything. Hold on. That's 10. There's 12. I have a sneaking suspicion they're going to pin us in until sometime around 1 o'clock. Matter of fact, how about this? We'll lower this one. Make that 12. And I'll bet we'll stall this out. More like this. And then we ramp. Let me just look at this. We can go all the way down here too. I don't think we're going down there, but I think worst case scenario, there's 7. It's like I want to see like 712.50 hold down here. Somewhere in there. And I don't like our velocity right now in 30 minutes. Yeah, watch this up here. Because they're going to try to sell us down here, but I don't know if they're successful. So anyways, the idea here is that we want to get higher as quickly as possible. The top line here is as quickly as possible. We got like a day or two, right? Get as high as we can. Force people to get excited and then sell into them. If possible. At the worst possible price. And then what we do is come into the beginning of the month for the merry month of May. And we try to get a low, whether a weekly or a monthly low in the merry month of May. I know a lot of people say I think a lot of people right now think that there's going to be a sell in May and go away trade. It's possible. What this reminds me of is, was it October of last year? Let's go look at it really quick. Yeah, it's this one right here. Let's go look at this one really quick. If you wanted what I think is going to happen, I could be wrong here, but what I think is going to happen is something similar to this right here. Oh boy. I remember this trade. This is the trade where I went to New York. And the worst part about now bear with me here. November, let's go look at this. So this is October here. And I remember this trade. This trade was brutal. The street basically wanted October to be a down month. Like hindsight trading, right? They wanted October to be the month. So the street can put their trade on in the lows of October to long into Q1 of 2026. This here was rage-inducing. Utterly rage-inducing. September didn't do it. September was up. Right? And then you're thinking we're going to go down into the month of October, get long for the spring, and they put you to the screws right up into the bitter fucking end. Let me just show you what the bitter end looks like. It ain't pretty. That ain't pretty right there, is it? Slam you, fuck you, fuck you, fuck you, fuck you. And then we're in the end of the month with this right here. And what day is today? Today is the 27th. And today is the 27th, right? We've only got, I think we got the 28th, the 29th, and the 30th. 3 days left. And we're already knocking one of those out today, right? We got 27th, 28th, 29th, 30th. So 4 days total. We're already knocking one of them off today. And we don't have the 31st, the extra day this month. So the 28th would be like the top, which is one more day from today. If we were to use this October as an example, you might have one more up day like today. And then you should begin the roll process to the downside. And this is pretty much it right here. See it right here? This is the consolidation. Smash it in, right? Everybody partying up here. We're going to trade. We're going to trade 7,000 or whatever. Start rolling your calls above. And do you remember when we came? The key part of point about this is, do we trade just like this into May? And the answer is, I don't know. The answer is, what you do is you come into the new month. So you come into a high in the old month, right? This past month got a nice new high. And then what you do is you wait, you come back and wait. Literally, you come back on the first Friday of the first month, which in this case is only one day, I believe. We'll check, but I don't think we're going to get that much of a bloodbath. Maybe we do. But what you do is you check every Friday. It's very simple. It's not hard stuff to figure out. It's not complicated. On this big, huge month, you check back on the end of the first week and you go, okay, are we ready to buy yet? Have we taken all profit yet? And if we haven't, we check back again. We check every week. So let's snap the Fridays, and here's Wednesday. Here's Friday. Right? Here's another Friday in here. Hold on here. So you check back on this first week and you go, probably not enough. Right? And I don't think this would be enough on May. All of a sudden we're down here. Whoop. Next Friday. This looks pretty good, right? Everybody went long. Good job. And then we come into the next Friday. I don't know where that is. It's somewhere in here. And then eventually we get down into OPEX. This is OPEX for the month of October. And we finally get the unclench that we're looking for. End of the month. This is the 21st. So in the merry month of May, we've got a bunch of sellers on the first week. We have pension rebalancing. We got CTAs for some to sell. Then we start looking forward to a big, huge data. We have massive data coming out the first week, like into the 8th. And so you'd be looking at like OPEX for May to be getting long for June and July, potentially. So when you have such the key takeaways here is when you have such a huge up move, you're looking for digestion and you're looking for a sign to begin to get long to escape. I think that's the biggest takeaway here is in May, if this was May, you'd be looking for a drawdown of this prior move, halfway point, somewhere in there, maybe a half-back trade of some kind, or even if it takes longer into OPEX to get that. So you should be the Johnny on the spot guy, and we're getting really close, right? We're like a day away from a roll. So you want to be like the Johnny on the spot guy in May. If you think about May, just be like, hey, I'm just going to sit on my hands. I'm going to let this digestion take place. I don't care what the reasoning is. I don't care if it's straight or Hormuz. I don't care if it's whatever bullshit they're spinning at you. You're just being patient and waiting for like the middle of the month. Not the middle of the month. Let's call it the 8th. And then let's call it the right around OPEX and see if we get that nice pullback, that nice digestion, and then a turnaround to trade up for the summer trade. And I think that's the key point here. For what you're looking for heading into the merry month of May. So let's look, let me get rid of all this stuff here. Let's look at Gamma. We're going to look at some SPX Gamma here. And let's look on net. And what do we have for target? We have like what's everything like, you know, we have magnet. When I talked about magnets, or I talk about or we have like sometimes we have a magnet, and then sometimes we have like repellent. Like sometimes the price can be a repellent, it can be a magnet, a place where we end up selling calls or puts, or we get drawn to it. And what do we have here? We're close to 720 or 7,200 for net gamma into month end. We have not hit that yet. We haven't had an unclench to hit it yet, but we do have a magnet towards it that draws us towards it as we get closer to month end. We still have not hit it. If you look here, this is 710. On SPX, we're trading 716. So we're just above, we're actually supported above 7100. This one right here, hold on here. On there. This is 7150. We're actually above this one as well. So basically what we're doing is we're looking to buy dips on 7100. And we're above 7115, I believe that is. We're not actually trying to trade this right here. We're trying to trade from here up. Trade from here up. I don't know why this isn't working. To smash into 7,200. Now, when we smash, if theoretically we smash into 7,200, you're going to get what? Bag holders, call buyers, and you're going to get a guy like John L. that's going to sell into you. Now, there's a function in this too. Sometimes you'll even go higher. Now, that sounds crazy. We might or we may not, but if there's enough call buyers all at once, and you'll say, no one's going to do that, Cap. Like, we didn't do that in October. We left. We're like, we're out of here. We made a bunch of money for the month. The whole market was against that trade, right? Made a bunch of money. We said we're going to leave, and we're going to come back in October. And so up in here, the same kind of a thing should happen. Push, 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 right? And you're not going to get swept up in that FOMO, that air of just vertical, right? Does that make any sense to you? So you want to be buying dips, slam this up here, maybe get above 720, maybe. I'd be risk adverse up there, but you get the gist, right? You get the gist that we're going to go up there and they're going to sell calls to you, and then they're going to leave with the bags and all that kind of stuff. Let's look at one date really quick, or zero dates. We've got a target up here of 7170. We've got another target here of 7,200. When you go to one date, 7,200, very prominent. So 7,200 is the target. Generally speaking, we can all acknowledge that, I guess, right? Hold on here. Oh, you got an auto refresh button, bro? Bork, I didn't notice your auto refresh button. That thing is gangster. Hey, it's already pounding away. Awesome. It just wants to go vertical. Hold on here. There's 7,200. It's just pulsating here. It wants to just rip faces off. So this is a magnet. This is 6175. No, excuse me, not 6175. Hold on here. Let's check this again. Zero date 7170. Right where we are. There's another magnet right here. So we need to get above. We want to break above this to what? to trade that right there, right? This is our trading zone. You already know the rules. If we break above this, we want to see 1, 2 new high, and then we start chasing that trade, right? For an eventual blow off, right? Meltdown or whatever. We only got another day to do. We've got 2 days to do it. That's it. We've got like 1 day. Tomorrow should indubitably, like, I would be selling tomorrow's high if we can on 7,200. The bigger question is, do we smash up here? Let's do it like this. 1, 2, 3. No, let's do this. I guess we could do it till Tuesday. We could make it here. We could make it all the way into Tuesday, maybe a Tuesday high at 12 o'clock or 1,600. I think this could happen before we get there. That's the gist right here. And then you've got 717 would become support. And underneath it, we would have support at, let me just look at net really quick. $7,150 and 7,100. This is the gamma support, or theoretically gamma support. We're on it right now. Whatever this back test was, that was support. You might want to get long here on that support. Hold on here. There's one more. It's significantly lower. Sweet. I'm just kind of stoked right now. We're holding up. 7130 is more like a speed bump. There's one more gamma bar right here, but it's a speed bump. It means nothing. Here we can. There is one right here, but it's minor. It should be yellow. And in truth, this is your gamma flip. There's a few more green gamma bars underneath, but this is really your real gamma flip is here. Let me just look here. There's a few more places down here that could be considered, like 7,000 could theoretically be considered gamma flip. Down here, but I would say it's right here. I would say that if you lose 7150, it's party time. Like, I would say that the moment you lose this, it's wham, 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 and even lower. 7,000 would be my target. Yeah, somewhere around 7,000. 7,000 would be my target down here. So you're basically saying we must hold this, and then we just back tested it just now. So I would suspect I might be a little wrong here in my charts. Yeah, not really. Hold on, we can look at the charts really quick. So theoretically, we've hit it right here. I gave till 12 to hit it, but we've already hit it early. You can see it. So it might just be Rampo-Rama time. Where's 10? There's 10. There's 12. There's 10:30. We're already starting it already. It could just be a matter of Rampo-Rama all day long. Let's go back and look at this. Yeah, smash up, up, two highs. Look for two highs above. The one thing I do want to say to you about this is remember that you're trading this zone. And you should be buying dips from down here. If you see the tip over 1, 2, we can begin to try to take this trade right here. But don't mess with this until you're above it. If that's not, you can I'm I don't know if I'm misspeaking here. You can mess from dips right here, and from 70. Hold on here. You can buy dips from here, but I wouldn't chase them above theoretically. I'd get out and let this happen, then I would do the second leg of the trade. Or you're buying dips from down here. And I don't think we're going down here right now. I think we're going to go down here Tuesday, Wednesday. It's like Monday, weekend effect follow through for a green week last week, push us up. And we don't have a lot of time to do it. The latest it should take. I got this on Tuesday at 4 p.m. But this could be just today. I think you can see this move up like 1600 today. We're right here. So I'm giving you time or price. It's one or the other. I think it's faster than you think it's going to happen. The only technical thing I would say to you would be trade the inside of the range until we break up and above to execute the second leg. That would be the only caveat I would say. Don't expect follow through. Don't like 1, 2, 3, 4, 5, 6 attempts to break through, and you're the Marine. This is the Marines up here. They get eaten alive. So that would be the only caveat I would make here. Looking for it to trade close to 7,200. There is potential to one other top line. Let me just draw this out for you. I'll just write out top line what it is, okay? Trade the zones is number one. Let's make this a 40 here. That's number one. Trade the zones. You already know if you break above the zone, 2 successful back tests with one new high, you can take that to trade the next zone, right? That's how you trade this zone. So that's rule number one. Trade the zones. Rule number 2. We should top. I would say the 28th. 28th. That's tomorrow. Probably around 12 or 1 or 10 or 12 in the afternoon. It could take until the close. Should top on the 28th. Okay, that's tomorrow. Next thing. What else? I think that's it. Trade the zones. Oh yeah. If support lost on, you can call it the HT. Lost on HT or on 7100. In my book, if you lose support on 7100 with a new low, I said 71. Oh, is it 7100? Yeah, 7100. I typed 7110. 710 with new low. Yeah, I guess I kind of fucked that up there too. 70. If support is lost on 7100 with a new low under it, sell everything. Sell everything. Fairly easy, right? Seems fairly easy. You'd probably want to see that new low under If your new low is under 7,100, you probably want to see it something like this. You probably want to see like this pin up here, or a rejection of 720, or a rolling calls higher, brief flips higher, and then it'd be something like this, right? Come down here. This is your first low. And then my assumption here would be that your second low would be like the 7,000. Dip your wick. And once you're underneath this whole support structure, we can really start like, fuck yeah, getting down there and selling everything. We're not there yet, but it's fairly close. There's your hourly trigger. Your hourly trigger would roll down, and we'd start getting the fuck on out of here. So we're not there yet, but if you're looking for that roll and sell, it's probably down there somewhere. Now for targets. If you are looking for targets down there, the most prominent one as of right now, until we get new gamma information for the new month, is 6,800. It's right in here. So if you wanted a monthly expectation for a low, currently it sits right about there. Monthly low target, somewhere in here. Here's your weekly. And you got a gap in here, and you got a daily trigger running up. So I would say 6,900 to 7,000, and then right in this, like right here. If there was like, hey, send me a dip my way for the merry month of May, it's somewhere right in here. Whatever I can get down here, I'll take anything. I don't care if it's like, oh yeah, we're in the merry month of May into OPEX, or if maybe it's like this. Hold on. Where is OPEX? Month end. Oh, sweet. It's not even the 22nd. It's the 15th. I was wondering that. It's over here. So you get your first week on the 8th. Here's all your doom sellers, CTAs. And you've got all of your pension sellers, right? And somewhere in here, we're we're either going to be here trying to get long, or even in here into OPEC or month end. You've got the 8th over here, and you're trying to get out on the 8th. You're trying to get out on OPEX, or you're trying to get out month end. It's either going to be OPEX, May 8th. These are basically your trigger dates, right? You got Friday the 8th. Look, all your call sellers are already rejoicing. They're all like, oh yeah, I'm going to sell calls up here. All these bulls are going to tell me that we're going higher. And all you're looking for is something like this down here. You can already see the 8th. This is the daily trigger already coming up to buy this for May. Oh my God, they dropped this down. And oh my God, we're out of here. Here's OPEX, suck us back down into reality. And you guys are just waiting down here to buy this dip. Even if it goes back down, it's going to recover, theoretically. I know the bears think we're going to crash. I know the recession is coming. We're like 4 weeks away from it. But basically, this is what if you're watching this show and you're a free member, you just watch this right here. Snip this right here. This is what you're doing. You're looking for a dip in the month of May. And you got the 8th. You got OPEX expiration, could be the day before or whatever. It's in here somewhere. And you're just trying to catch this dip to go higher into the summer trade. And that writes the book for the bears. I'll just draw this out now. Just going to draw it like this. Here. Right there. And right there. It's just like that. And this is our trade for, it's nice and easy. You see it right there? You can put us just right back on trend again. You know, I won't even give them the big trade. You can see it right there. So come right back down in here, get back on trend again, right back to where we were before. Does it make any sense? Maybe you can see this here. Here's trend. And you're just looking to backtest trend. That's it. It's the only function for this month. Can we backtest trend? It's fairly simple. Right in here, back in here for your summer trade. And then we'll let them deal in July. Let them deal with July. So we're trading the 30s into summer. Right? They unwind. So they're selling you 730 calls, 740, 750 calls. And they don't print these things until, mid-July, sometime in there. Printing that 740, and then we're finally dealing with your recession shit in August, September, October, and all the other doom shit that they want to see come back down to Jesus, all that stuff that they're talking about. Rear view mirroring this for now, and looking for like the perpetual hope of the stock market. Then we deal with the real doom. I don't think we deal with it right now. I think there's going to be some sort of summer trade that pins us in, and then we will then face the fallout in the fall over this, and we'll deal with it then. I think from the perspective of velocity, that there's potential for another large correction in the fall, and I think they should become more frequent. And I think they should be violent. As we finish out this bubble, it could be like, everything is fine, vertical, big blow off, and then we're vertical once again. So anyways, we'll just watch this closely. We'll watch this closely. Yeah, I've got I don't know where. Here, we should look at this together. Maybe I should get a different chart here. Hold on here. Let's look at a new chart. Create a new layout. Like, I have a sneaking suspicion, like whatever. Can we go a day here? Hold on here. We don't need this. Get rid of that crap. Now, here's this 60-80 down here. This is a daily chart here, but you want to look at this stuff because when you're looking at, like, this is a big thing right here. Like, we're being told no, way is lower, no, way is lower. And we're above it right now, right? This gap was like the T's, right? We leave gaps behind all the time. You see that? See those gaps left behind? You know, we theoretically, even if it's down here, which I don't think that it is. I think it's here, but that's the halfback trade right there. Worst case scenario, not cap or go. Cap says we're going to 6,600. No, I think the halfback is the most reasonable. This is best case, and when it's done matters too. I mean, look at that right there. Worst case scenario. There's OPEX. How about month end for May? But then you're talking about this one right here. Whew. How's that look? Would that melt your face off right there? Would that freak you the fuck out? And they get you so high that there's nothing you can do. That's worst case scenario right there. 68. So they save your 6,800. Like we actually tease it, but we don't close it. Whew. There's your equal legs into the end of the year. Somewhere like that. Push it up higher. This, I think, is a fake out. I think you might get that one. Maybe you might. And this is where the doom comes in. There's your equal leg. Something like that. And then a big roll in here in next year. We'll leave this up here, this gamma chart. I'll post this for you in the Discord. Remember that you can go above if call chasers go up there. So they're trying to sell these up here. Try to sell 730s, 725s, even 720s you could be selling. This is all like call selling up here, though. If you want to snip that, you can. Let's go on the bottom right-hand side. Hey, look at that. They're still grinding us out in here. Whipsaw, still grinding us. I've got us not being allowed to break above this until 12 p.m. But I've got us like super ramping. Like this should go vertical. Like moonshot. Let's watch this closely here. We're buying dips right here on this for a breakout up and to the right. Put that right there. Okay, we've got let me just check one more thing here. There are no large impact reports until Wednesday. At 8:30 in the morning on Wednesday, we get building permits. We get big ones. Mind you that every economic data point I'm going to read to you right now is major economic data. We get no major economic data today or tomorrow. On Wednesday, we get building permits at 8:30 in the morning. Durable goods, 8:30 in the morning. Housing starts, 8:30 in the morning. 2 in the afternoon, we get Fed rate decision. We also get the 2:30 p.m. presser. On Thursday, we get core PCE month over month, GDP growth rate, personal income, personal spending, all at 8:30 on Thursday. On Friday, we get ISM manufacturing. On Tuesday, the 5th. So we get nothing from the 2nd, 3rd, 4th. So nothing from the 2nd, 3rd, and 4th. Which is Friday, Saturday, Sunday, right? But then we roll into huge data beginning the next week. So when I told you, like, look for the 8th or the OPEX, on the week of the, where the 8th falls on a Friday, that Monday is the 4th. There's no data. But then we roll right into Tuesday to ISM Services PMI, excuse me, JOLTS at 10 a.m. as well on Tuesday. Then on Friday, we get NFP. That's the 8th. And then from there, we go into existing home sales on the 11th. That's Monday. Tuesday, core inflation rate month over month. Core inflation rate year over year for the 12th. And then the 13th, we get PPI. On the 14th of May, we get retail sales. So indubitably, all this huge, massive data dumping that we're getting lasts until the 14th of May. And then from there, we roll right into quarterly expiration, or excuse me, monthly Vixpiration and monthly OPEX for the month of May. So there's a lot of there's a whole nother source of volatility that's just economic data, beginning on Wednesday of this week and doesn't really end until mid-month of May. And a lot of this data, of course, will be the source of stake and sizzle, and if it bleeds, it reads, of unrealized volatility, and the impacts of the Strait of Hormuz and all the other doom bullshit that's going on out there. It doesn't really pass us by until middle of month. Let's just I'm gonna look at some at the money volatility here really quick. So let me check this out really quick here. Ooh, Bill Ackman's Pershing Square IPO is set to raise $5 billion. Let's take a look at this. Is from Gamma Labs. It's the best way to look at this. It's chopsticks. I just read that. I've been reading Big Crash Soon. Well, that's my big takeaway is that I'm like, you have this big, huge down month, basically, right? Then you get this big, huge up month, and everyone seems to want, like, they're like, okay, we're going to go back down there again and crash. And I'm like, it's not how this works normally. Like, normally, you get your chance as a seller, and then you get the fuck out and come back again in the next one. This is at the money volatility, SPX at the money volatility. Let's see if we can make it a little bit smaller. Let's take a look at it like this, maybe. And the one interesting thing here is volatility grows here. You can see it, right? So at the money volatility is expected to grow, and this is the second trading day here. So we've got a little bit of volatility here. Next trading day or two, then big volatility, of course, into the weekend. So we got big vol on Wednesday, and that's when all our data comes in, big vol. But also notice that volatility remains heightened for the rest of the month or the upcoming month of May. The expectation, at least. Now, this volatility stuff change is only good for. Oh, sorry. On here, what the fuck am I trying to do here? This fall, I can't do this. I can't do this with my cursor and a pen, I guess. Well, maybe I can. Shit. I broke my crayon again. Let's try this crayon. I'm getting old. I'm I'm still feeling the COVID effects too. Dude, I was having finger problems yesterday. I was trying to use my cursor and I couldn't use it with my fingers on my laptop. Okay, so volatility seems like it remains elevated. There's a small blow off of volatility after the rate decision, but then vol increases into the fourth trading day, into Friday. This implies that's going to go down. Now, the thing about these charts is that they're only good for a few days, but there is an expectation priced in right now of elevated volatility, at least into the end of the month. So that doesn't really mean right now that to expect volatility to be, let's even leave this up, right? Hold on here. All right, we're good. We're still good. Let's get rid of that right there. So we have the expectation of volatility increasing this week, and it remains elevated as of right now into 18 trading days from now, which puts us into past the 8th. So the 8th, more data dump, more shit doom. And to be honest, if you're waiting in the month of May down at 6,800, whether we're trading 6,670 or we're trading 6,800, trading 7,000, holding it, does not matter. You just want to be the guy waiting and hanging out as this volatility increases over the coming weeks. And I think that the narrative here should be like it was in October. If the 29th was the high, we had 31 days in the month of October. We have 30 days in the month of April, I believe. So we're close, right? I would say today, tomorrow. Tomorrow would be my pick. You should see the high by tomorrow. And then think of like that fall. Think of this month like that fall, that following month, where you're just patient. You come back each week and you see how far we're down. And I kind of think that's the plan here moving forward. The one thing I will say to you is on this topic is don't get caught in the doom. Like you're more than likely on the low for the month of May going to hear some of the worst shit you could possibly hear, and you're going to get left behind. They're going to run you up all summer. So don't be that guy, because what happens to that guy is that guy watches the market go up and he's finally bullish. And it's like middle of summer. and you're screaming from the top of your lungs how we're going to go higher, and we don't. We trade sideways, we do the doldrums, and then you get sucked into the fall doom, and you repeat the vicious cycle of bearishness when you should be bullish, and bearish or bullish when you should be bearish. So if you're the guy talking about a breakout, we're going to go up, break out, and trade 760 by the end of May. I don't know if that's going to happen. It's a very low probability. You should be patient in the merry month of May for a dip to buy. I think that would be the top line on this. Hope that makes sense. Okay, what else we got? We went through econ data. Let me just check VIX 9-day here. VIX 9-day are already a little bit of... VIX already trying to sneak up a little bit. Just look at this really quick. There's one. It's trying to break out. I don't know that it can just yet. Do you have to press like alerts on YouTube? You know what I need to do is so we're launching this new show, and one of the things in the new show is we're gonna make our socials like consistent and productive for traders. I use it for my own personal shit right now, and alerts for stream. Hold on here. I probably need to make a post every day of the stream, where like across all these platforms. We're launching that with the new show too. We're getting like a social media manager or something. Like the social media manager is supposedly going to be doing like making sure that we're communicating well on socials at some point. I hate that. I hate that we're switching into this to some extent. We're going to become like a we're going to succumb to the system. It sucks so bad because you're like forced into it by social media companies. You got to play nice. Oh, hold on, sorry about that. Let's leave this right here. Any dips down here, be buying. Here's a low, a higher low. Right here. I think we're going to grind, though. I still think we grind in here. I think we ground like this last week, too. Let me just look at last Monday. Let's look at this. There's a high at 10 a.m. Grind it down. 11 at 11:30. Ramped it again. That's 12 o'clock-ish. 11:30. 12. Yeah, somewhere at 11:30, 12. We start ramping again. You can see him here on Monday doing the same thing. Sold it all the way down again. And they just rocked it. And then we actually went vertical, I think. This is Tuesday at 7:30 in the morning. Watch this closely. So this is last Monday, right? Rocket up here to 10. And then went Up in a 1600. We made a new ATH at 7:30 in the morning. Gnarly. Let's dial this back to 11:30. It's somewhere. I'm gonna keep it at 12. And we know anything above this, we can, if we go anything above this, we can take that trade. We got to be above 7:14.16 or so. Otherwise, we're buying dips. Lower. Oh, hold on here. Here we are right there. Buy the dip is right on this HT. Don't be long here, or you can be long, but if you want to re-enter long, just be patient. Let's keep this here. What is that? 7:12.21. $7.12.21. That's the basis to do this. Okay. Got it. And the low we haven't hit of 7. We haven't hit 7:12 yet. The overnight low was the overnight low at 9 p.m. was 7:12.32. $7.12.46 is the other place right there. We were fairly close to it. They bought the dip at this morning at 7:12.61. So you want to watch this right here. And I would say start watching at the 30. Start looking for the Rampo-Rama here at some point. If you can get anywhere down in here, I'm on board. If they even allow us to. This is a good trade right here. If you're in this, if you're still in this, stay long. Into the closing bell, at least if you're in cash market. If you're in this trade, stay on this trade. It's going to go up into the end of the day. It's just a matter of time. Okay, so we're through econ data. Let me get through some morning stuff here for you. So you get the gist here, right? Everybody's pretty much the same page. Just go through the morning news here. Trump to hold national security meeting on Iran stalemate with top advisors. That's per CNN. Officials to discuss whether to resume bombing campaign on Iran after ceasefire was extended last week. Putin received message from Iran's supreme leader. Who the fuck cares? Russia will act fully in interests of Iran and regional nations. Yawn. I got some Microsoft news here. Next phase of Microsoft OpenAI partnership. Microsoft no longer pay revenue share to OpenAI. Microsoft will remain OpenAI's primary cloud partner. Will continue to have a license to OpenAI IP to 2032. Douche bank, Fed set to stay on hold with risks of a more hawkish tone. This is for Wednesday. With policy still seen as well positioned to deal with risks to the outlook, the Fed is expected to extend its pause at the April FOMC meeting. The main issue is not the rate decision itself, but whether the Fed starts to frame the outlook in more clearly two-sided terms in the statement, or whether Powell signals a more balanced risk assessment in the press conference. The base case is still that any meaningful change in guidance waits until June, though the risk is that communication leans more hawkish before then. I think Jerome's got 2 or 3 weeks, maybe. Might be 2 weeks now. Is it 2 weeks? I think he's got 2 weeks left, this chair. When does his chair end? Fed Chair Jerome Powell's term as chair ends on May 15th, 2026. While his leadership of role concludes, Powell is technically allowed to remain in the Fed Board of Governors until January 2028, though many chairs traditionally step down entirely after their term ends. So this is his last meeting. We probably need to talk about Warsh. There's a lot of noise around this right now. This weekend, I started reading shit on Friday, and then by Saturday, the real fucking weirdos were out. I don't know how these guys get news articles. A couple articles I read this weekend I thought were AI. written by AI. You guys saw that New York Times was accused of writing an AI article recently. I read at least a few articles this weekend that were highly probable to be AI. There seems to be like a like Warsh is doing. All right, let's go over a few things here. Let's get you caught up on Warsh. Like, I want to give you top line Warsh stuff. So, Warsh is considered a hawk by many, or portrayed as a hawk by many. I listened to a couple of his like recent speeches that he's given or talks that he's given, and he had a CNBC interview recently that I listened to, and you have to parse his words closely. He's of the same mind as the other guy. I forget his name right now. Marin, maybe. How do I explain this? I'll have to go through. I'm going to grab a white paper from Moran, but Warsh is he was in first QE1. He was a proponent of it. He was anti-continuation of QE in 2008, 2007, 2008. He was actually a proponent of QE. Even though everyone says he's like a super hawk. But he's also of the mind of Moran trying to separate the long and short end of the rate. And he's not anti-cutting rates. I have to say that. He's not anti-cutting rates. He's more focused on the long end. So when you hear things like, it's just like top line shit, like, the reason I'm saying like this, wording it like this, because his words are being bent to a narrative that he's a hawk. And I don't know that he's as much of a hawk as he portrays himself to be. He claimed that he wants to do more QT, which we've been doing. So it's not like we haven't been doing QT. So people are like, oh, look, he's a QT proponent. Finally, he's going to get things under control. But we've been under QT now for a significant period of time. And we've made great progress on QT. And his verbiage, if you listen to him closely, he's not... he's more of a proponent to use rate decisions to help the market when it needs help, and to hike or be more hawkish when it doesn't need help. So if we're on highs, yeah, I would expect him to be a little bit more hawkish. But if we're on a low, don't expect him to not cut rates, is my point. And when times are good in the stock market, you should expect more QT. But don't expect either that he won't switch to QE. If there is a Fed put still, is my point. So the separation of these two things, or the attempted separation of these two things, which have not been separated since 2008, you could say, even 2000 to some extent. You could even argue 87. Like MMT really came into fashion in 1987. But the point that I want to make here that's important is, one, you've got Jerome Powell leaving in 3 weeks. 2 weeks? 3 weeks? May 18th. 3 weeks. Is Powell going to like slam the market with major rate hikes? Probably not. I think we should get one rate hike. I think that Powell should give us 25 basis points. He may not want to do that. This article I'm reading to you here is saying, this is a paid article, by the way. It's not public. If you think that maybe Jerome wouldn't hike rate hikes because of rocking the boat for Warsh, I bet those guys speak enough that if Warsh was like throughout the hike now, I don't see why he wouldn't hike. Now there's a lot of uncertainty. Or I want to say a couple weeks ago, you could have made the argument that there was so much uncertainty that he may not hike. But for where we are right now, I think you either get on FOMC the hawkish tone, like this article is purporting, or you should be looking at a 25 basis point hike. The bigger argument I think here comes to is Jerome willing to do that in his last FOMC decision? And he's going to want to do a victory lap too, right? This is his last time that he's going to be speaking. So there's like victory lap things about this FOMC decision. You've got either the hawkish tone or the hawkish hike. Either hawkish tone or hawkish hike of 25 basis points. But I think greater point here is if you saw our hike on this Wednesday, I don't think you should discount a cut at some point this year. If you were to get the hike, you should expect a cut. So I don't think cuts are off the table this year. And I think we're miscategorizing Warsh in his words. If you listen to him closely speak, he does not pigeonhole himself in rate hikes. Don't think that like Warsh is the guy that he's portraying himself to be to everyone. I think he's more in line with Jerome than you think. His words that he's been speaking, it's like he had a big thing on QT this past week, and or a week ago, I think it was a week ago, he was talking about QT and how he wants to lower the debt, and they all want to lower the debt, and they all have been, even though the debt's spiraling out of control. Even Jerome has done QT operations, major ones, so it wouldn't be any different than where we are right now. Is my point. On the long end, he wants to continue doing what we've already been doing. On the short end, if you listen to him closely, he comes off as no cuts, but he left back doors open in his conversation, is my point. So I wouldn't look at Warsh necessarily the narrative of him being super bear as being what you think he is. I think he doesn't like to overdo things. So maybe there's a more pain in there when every time they put the crack on, they don't put as much. They take the crack away a little bit sooner than you'd expect. But I still think you get the crack from this guy. I don't think this guy is as bad as you think he is. The only thing that makes me scratch my head on this whole thing with Warsh coming in and Jerome leaving, this is the big head scratcher for me, is if we're really truly moving back towards that time period where the dollar gets revalued because of our own manufacturing, where the U.S. has, keep doing QT, get away from MMT, the Warsh, Moran, I'm going to call him Marash. What they're trying to do, I don't know if it works. And I think both of those guys have made that known, that they don't know if this will work or not. They don't know the outcome. I know what they're trying to do. They're trying to revalue our stock market based upon the U.S.'s first in everything status. Not pegged to gold, no longer pegged to oil. It hasn't been pegged to oil for a long time. The petrodollar, in my view, is bullshit, scam. We haven't had a petrodollar in decades. I don't know if they're successful or not. That would mean that the stock market trades sideways and up more slowly too. There's an argument made that you would take back the inflation trade. They would give all of this back. But I don't know if they can get there. I don't know if they truly can get back there again. If they did, you're talking about stagflation and a depression, basically. If you did it slowly, yeah, you'd be talking about a depression, I would think. And if you did it slowly, it wouldn't matter as much. If you sucked the money out of the system with QT gently, it wouldn't be too bad, too much pain. But I know that the conspiracy theorists, world's going to end every other week crowd, they want to see that. They want to see that right now. Like just like rip the Band-Aid off. You'd probably collapse governments around the world if that was the case, but I don't think that it's going to happen the way that you think it is. And I don't know if we can unfuck ourselves unless it's involuntary. And I don't even think you'd want to. I don't think if you as an American would want to see it happen like that. I think they'll attempt to do it slowly and more painlessly over time. But we're not there yet. So this is all like espousing macro bullshit. I truly think that Warsh and Moran, when I've read the white paper and I've listened to from Moran, and I've seen the mechanics behind what they're trying to do. I think it's a pipe dream. I think you make the attempt and you try it, but I don't know that you're going to be successful. I think the reality sets in and these guys get caught in this stuff. I think even for Jerome, I think for all of them, when you look at all the ex-Fed chairs, I think that when you finally are coming into the Fed chair, you think you're going to be the guy to do it, and then you get sucked into reality. And reality is not. It's not what they're purporting. Do you know what I mean? Like, I want to be this, I want to be that, I want to be this, and then you go through the reality of it, and you're like, oh, shit, I got to make cuts, or oh, shit, I got to do this, or oh, shit, I got to do that, or I got to start some QE and pumping up, and I don't want to be the QE Fed, and all of a sudden you are the QE Fed. You're kind of like pulled into politics, and you're pulled into conditions, and you have to do what your mandate is, whether you want to or don't want to. And so far, the executive has been fairly unsuccessful in asserting their power over the Fed. And not only that, we have the midterms. So we got to wait for the midterms, don't we? I would think, to see if Trump gets tied up for the next couple of years. Even through executive order, he's not going to get control of the Fed. He has to win. Just watch this grinding in here. We'll look for this 11:30, 12 o'clock unclench up to the upside here. I can't say. If I'm going to keep reading this to you here. Only limited changes are expected in the post-meeting statement. Recent data still fit the Fed current description of growth as solid, job gains as low, unemployment as little changed, and inflation is somewhat elevated. Any hawkish shift would be more likely to come through subtle language changes, such as adjusting the reference to additional adjustments or describing risks to the dual mandate as broadly balanced rather than tilted in one direction. Powell's press conference is likely to focus heavily on the economic effects of the Middle East conflict. I agree. The message is expected to be that uncertainty remains very high and that the Fed still does not know exactly how the war will feed through to growth, inflation, and policy. I doubt that. I think it's going to be aggressively hawkish if you don't get a cut or a hike. I think if you get the hike, you're going to know. I think if you don't get the hike, you're going to get extremely fucking hawkish speak from the Fed. I don't think there's uncertainty at this point. We're going to get a slap to inflation. Inflation's ass is going to get slapped in here one way or another. There's no way around it. So I don't know that we stay on the uncertainty part of this. Or if we stay on the uncertainty part of it, I think it's going to be uncertainty leaning hawkish. Like, we're uncertain as to damage done, how bad the damage will be. Not like we're uncertain if we're looking to a sunrise or a sunset. It's, oh my God, the sun is setting. How bad is it going to be? So I tend to be more, man. The one thing that bugged me last week too was I looked last week at the 3-month and it was going down, and I was like, "Ooh, that's no cut. I mean, that's no hike." Excuse me. Let's go look at it right now. Let's see if anything's changed. And it's still rolling down right now. If you look at the, this is in my face here. I'm telling you that I'm expecting a hike. 3-month is saying no. 3-month bill has been dropping consistently, rolling to the downside. And that 3-month gives you a precursor for what to expect. It's not expecting a hike. It's not expecting a cut, but it's not expecting a hike either. So that's in my face of what I think should happen. If you want to know what I think should happen, they should hit us with a 25 hike. That's what I think should happen. And then they can come back and we can suck each other off. You can get a nice cut, or you can get nothing, and then you can get cuts if you need them when we come into the summer or fall. Let's look at this really quick. We're on all-time highs right now, right? I think a hike would be good for us. And what would happen if we get the extremely hawkish Fed or the rate hike? I think the reaction would, of course, be negative, but I think it's knee-jerk. I actually think if we had a rate hike, that the market would have continuation to the upside. The bond market would feel happy, know that the Fed is working on this. But if they save the hike for Warsh, maybe that helps him out for the next meeting. Next meeting isn't until, I think, June. I could be wrong on this, but I think June. Yeah, June 16th to 17th is the next FOMC meeting. And the one after that is July 28th, 29th. So maybe you're saying mid-July we get no hike this time. Fed's first FOMC no hike. I don't know. I'm the new FOMC chair, and I'm gonna I don't know, do what Jerome did. And then July 28th we start hiking because inflation's raging. There's potential for that. You get hawkish language today. You get the new Fed chair for June 16th, 17th. Everybody's happy, new chair. Then you get the hikes on the 28th of July. And then you get a rate cut October 27th. And that could work. So nothing now, nothing for June. We're monitoring July. Oh my God, everything's horrible. Let's start hiking. Markets on fire. We solved inflation in October 28th, and then we cut. We get exuberance to the upside, and then when's the first meeting for next year? Scheduled for 2027. January 27th, March 16th. I'm just looking to see how bad it's going to get in the spring next year. How ugly does it get? Yeah, I could play with that. Just looking at the schedule, scheduling wise, it looks like you could get no cut this week. You just go no cuts or monitoring. Warsh comes in for his first term, or maybe there's some kind of technical difficulties to get Warsh in place. So you get two Fed meetings of no rate hikes, no rate hike cuts. I think Warsh 2 still might have some issues. Getting the actual chair could take longer. He's not guaranteed to be chair in 3 weeks. There's still technical issues. Let me just look at this really quick. assuming his nomination is confirmed. Making a late April, early May confirmation likely. So if you think about this, if you think about like the chair term, right? So Jerome Powell's term ends on May 15th. He's likely going to go to the FOMC and tell you, my term ends on May 15th. I'm willing to stay on as long as needed until my replacement is put in place, pending Senate confirmation. The best outcome is that Warsh is ushered in easily on the 15th or in mid-June. Excuse me, early May. It says making late April or early May confirmation likely. So you get mid-May, right, would be the earliest. If there's any kind of issue getting him seated, I would assume Jerome will say something at this Fed meeting saying, if it takes into end of May or early June for the next chair to be confirmed, I'm willing to stay on. So if it takes into mid-June, maybe you get Warsh first time. Let me just look this up really quick. Has a Fed chair ever raised rates? First FOMC. Make a splash, right? You ready for this? Jerome Powell raised rates his first FOMC meeting in 2018. Alan Greenspan did as well in 1987. Guess what else? Janet Yellen began rate hike cycles early in their tenure, but not her first one. Volcker, shortly after becoming chair, Volcker took drastic action in October 1979 to increase the Fed funds rate. Although this was a swift action, it highlights an immediate aggressive policy stance. So you'd figure the first rate hike, if Jerome doesn't do it, June or July. And it would either be, either one of those. You'd probably see, or at least there's precedent for Warsh to give that first hike. And if he's going to set the tone of I'm the hawk, even if he's not, maybe Powell would want to give that opportunity to Warsh to do that. So no hike. And then depending upon his confirmation, if it takes into June, I don't see why it wouldn't take into July. I saw some talk about how it would be difficult. Let me check here. Warsh signals a new Fed playbook as confirmation nears. Kevin Warsh appears on track for confirmation as the next Fed chair. Tom Tillis is the previous holdout, wrote on X that I look forward to supporting Warsh's confirmation. DOJ appears to have dropped the criminal investigation into JPOW, which Tillis strongly opposed as a challenge to Fed independence. If confirmed, Warsh could become Fed chair in May, preside over his first meeting of the FOMC in June 16th, 17th. Warsh outlined during his April 21st confirmation hearings that he plans regime change at the Fed with reduced emphasis on forward guidance, a smaller balance sheet, but we've already been doing that. Like the regime change at the Fed, I'm almost guaranteeing it's the same regime. I'm not kidding. Which reduces the emphasis on forward guidance, a smaller balance sheet, and a more focused role for the central bank on a narrow definition of monetary policy. These initiatives align with Warsh's previous statements. However, the overall path for monetary policy may remain similar to Powell's. Shocker. Thank you. This is an article from right now. I haven't read this before. This is from Forbes today. Came out 17 minutes ago. I agree with this. It's not going to look too dissimilar from Powell. I 100% agree with that. based on market expectations. Why Warsh wants to dial back forward guide. Warsh may seek to scale back the Fed's use of forward guidance when policymakers signal how monetary policy may trend over coming months. That is a bad thing. So what he's trying to say here is that they want the adversary Fed now. They don't, which is kind of bullshit. We tried to get away from that with Powell. Powell wanted to give you a heads up as to what to expect from federal from the Federal Reserve coming the path forward. And he does not like that idea. He likes to fuck you. I'm against that. I like the non-adversarial Fed. I've traded through adversarial Feds. They're no fun. And they're the I gotcha stuff. What you do though is you just go risk off. The solution to that is you go risk off, even if it's up or down. You don't care. You just go risk off and you wait until the fallout. What a similar Fed balance sheet would mean. Fed's balance sheet has grown dramatically since 2008. That's false. Let's look at that really quick. See, this is this is Forbes. I'm shocked. Let's look at the Fed balance sheet really quick. So I'll read this headline to you. Let me show you a few things here. Let me just get some facts for you guys here before we go through the rest of this, because there's a lot of bullshit in here. Like what you want to do and what really happens. Let me just check the repo market blowout here. Yeah, the debt to GDP is rising right now. But what do I want to show you guys? Can't seem to find it here. Having a problem finding it. Yeah, this is in the face of this. This is Fed's total assets right here. And this is the bigger, I mean, has it risen? Yes, it has, but this is coming down. It is flattening right now. And the debt to, let me just look at this really quick here. At any rate, the reason why I'm showing you this is because of this right here, this repo market blowout, QE crisis right here. Every time we break below this, we'll just watch my cursor. And that's where the fear that we have another repo market blowout. This article is saying the Fed's balance sheet has grown dramatically since the 2008 financial crisis and again during the pandemic. Before the financial crisis, the Fed's balance sheet was roughly $800 billion, expanded sharply through several rounds of quantitative easing, and ultimately peaked at just over $8 trillion in 2022. These increases came from large-scale purchases of Treasury and agency-backed securities, which injected liquidity into the financial system and helped push long-term interest rates lower. Since that peak, the Fed has reduced its holdings. Okay, so they're not really lying. Because the headline here is inside of this thing about Warsh is what a smaller Fed balance sheet would mean. But the balance sheet is smaller. And I think that needs to be the key. So, like, is he different from Powell, or is he in the same thing as Powell? The question becomes, does he stay on track with Powell with the reduction in the balance sheet? Or does he force a repo market blowout, basically, second one? I don't know that he can. He might be able to, but he's got midterms, so I don't know that he does. A narrower focus, he says, since the peak, the Fed has reduced its holding through quantitative tightening. The balance sheet now stands at a little over $7 trillion, still far above the pre-2008 levels and representing a significant share of outstanding U.S. government debt. So the question becomes, like, can he do that? I don't think he needs to. I think he lets the business cycle do it. My assumption is that once the build out is done on AI, he would let it naturally happen. That'd be my assumption. Since that peak, the Fed has reduced its holding through quantitative tightening. The balance sheet now stands at a little over $7 trillion, still far above 2008 levels, and representing a significant share of outstanding U.S. national debt. I think the greater question would be, here we go. Come on down. We're going to see if we can get this pickup here at the end of the day. This is the part where we all get questioning here. Can we actually take this run higher? I don't know that Warsh can do this, like, himself. I don't think that he needs to. I don't think he's unaware of that either. I think the greater question is when, like, if we end this business cycle, we end the AI bubble at some point. The bigger question would be if he's the Fed chair, does he need to then support the market on those lows? That's the bigger question. So if we pop the bubble at some point, the build out is done, we're down in the depths of hell. It would be like, you don't need the Fed to turn the party off, as I guess would be the way to describe it. You don't need the Fed. You can just let the business cycle do it for you. The question comes, though, do they step back in or not? And if they don't step back in, how deep does it go? And then before you know it, your balance sheet is going to be annihilated, right? That's what I would think. At any rate, so if the Fed doesn't, or the Fed or Treasury doesn't step in, that's where your big question comes into play. Do we create more debt to dig ourselves out of that low or not? A narrower focus on monetary policy. Warsh plans to focus the Fed more narrowly in monetary policy. That means the central bank may have less to say about topics such as the environment or diversity. Warsh has signaled that he intends to keep the focus on the Fed's statutory mandates, controlling inflation, maintaining employment, That sounds like QE to me. Still sounds like QE. How markets are pricing in a Warsh Fed. Despite these details from Warsh, monetary policy expectations remain broadly similar to those under Powell. According to fixed income markets, that means that interest rates could move lower in 2026. But for now, the most likely outcome is that rates hold steady for the remainder of the year. Maybe you get one hike. So Warsh comes in, he gives you one hike, 25, that he means business. He means the business. But I don't see how. Maybe he could force it. He could force with a more hawkish stance, force the issue, and maybe force the business like into a business cycle downturn, I guess, into the top of a bubble. But I would wonder if he was sitting at the bottom of that bubble bursting, if there wouldn't be QE. And if there isn't QE, is there stealth QE, where central banks are loaning money to hedge funds so they can put it in the stock market? We do that in the U.S. Like stealth QE maybe to start. But I doubt it. If you're in the shits, everyone's going to want money. It's like removing the crack from the crack head is not as easy as you think when you're in the situation. We're almost there, guys. Almost. I'm looking for 7/12/45 and 7/12/21. We're almost there. Let's watch this closely. What did I say I was looking for? 7/12/21 and 7. Oh, we hit it. We just hit it just now. This one right here. I wanted to see this one get hit and this one right here get hit. This was the dip by the dippers down here from 9:30 right here. We're going to get long as fuck here, boys. We're going up into the close today. Anybody tell you? Let's turn some of the. I gotta get a trade going here. Hold on. Yeah, I don't see Warsh being as hawkish as people are saying or purporting. I see the one rate hike from him to tell you he's that guy. I don't like the idea that they're not going to give forward guidance to us. I think any of you, no matter your positioning or your bull, bear, or whatever, I don't think that it serves anyone's interest to not do guidance anymore. Oh, you are ready to get long. Okay. You are ready to get long. Okay. If you're going to get long here, right, they may not afford us a print on the other side of this at 9 a.m. So we may need to take the trade off in cash market at the close today. If you're trading futures, you're probably okay until the morning tomorrow. They're likely going to do the whole like trader's brace bullshit for Fed rate decision. But just be aware of that, okay? We're going to start ramping here shortly. That's the low, right? I think that's the low right there. You might get one more. It's potentially we could get one more down here and then up. We want to watch this right here. So we know that this is no longer the low. We think that this is right here. I'm going to put this one right here. We're going to do this one right here. And we know how to time lows, right? Doesn't matter where it is, right? We think this is the low. We want to see what? We want to see this get tapped right here like it's about to be. We want to see this hold right here. We want to get up just like that, okay? We're going to get rid of this one just so we can see. We hit our first mark right here by a pin strike. That yellow looks kind of funky, doesn't it? It looks like the yellow. Looks like a pale yellow. Yeah, you guys all want to get long at the end of the day, huh? All right, you guys are all saying, yes, I want to get long. Guess we're all getting long together. Fed shop balance sheet has been going down. I got the data right here. I just showed you the chart. Balance sheet has been going down. Well, it's gone down significantly. It's flattening. It's starting to go back up right now. They are doing some QE. They're doing a like alternate QE right now. But it's been going down. It's been going down consistently since 2022. That is all. I'm telling you right now, this whole wash thing, it's like literally, it's a scam. Like I heard him last week when he's like, we're gonna get more hawkish on the balance sheet, and I'm like, what are you talking about? We just did all that. I'm like, it's kind of like claiming you're doing something that you actually it's been ongoing since 2022. And rates are high right now. You gotta remember, we're not at 0. We're not at 2.5. Rates are still high. They're still restrictive right now. It's more like you want to set the stage that you're more hawkish than the last guy is the point. Like Jerome was a super dove, so I'm gonna set my own tone. Like new regime change, something needs shaken up. But then when you look at the actual facts, you know what it reminds me of? It reminds me of all the Republicans and Democrats that say like they scream and yell at each other, and yet when I look at all the stuff and the data in the background, they're all doing the same shit. They're all the same fucking people, dude. Like that's how I look at it the same way. It's all the same shit. So you have to like the new guy comes in and he says like, "Hey, we're gonna do this and we're gonna do that," but in reality, they're all doing the same. It's kind of like tariffs. Like all modern presidents have been tariffing and been at war with China. And, you know, like they're all, and then of course the constituents for each candidate was like, that guy's awful, this guy's awful, that gal's awful, whatever. But they're all doing the same shit. We got to get tougher on this and tougher on that. When you tell a Republican that Al Gore removed more illegal immigrants, that fucking sent Republicans off the fucking side of a bridge. Al Gore. Yep. Al Gore. He did it more quietly. But, you know, we've always been, like, we've always had, like, you can actually see, like, illegal immigration, you can see like the trend of it. It's all the same shit over time. And I think the same thing applies to Warsh. I think he has to say he's something, and then the only thing that I would suspect that is the more dangerous part is the more adversarial Fed. I just think that's just to be a shithead, just like douchebag behavior. That's the only thing that I see. I see that, and then I see if he really is that person that he said claims to be. How does he do that without how does he do that without the executive being successful in asserting authority over the Federal Reserve? Had the Federal Reserve or had the executive been successful in that, I might give that more credence. But that hasn't happened. I give it a little bit more credence, but if he has to follow mandates in federal law, then he's not going to get away with it. And we've had examples of this in the past too. We've had Fed chairs that have claimed to be something, and then they turn out to be something completely different than what they claim. Like they want to do this and do that, and then when they're in the situation, the gray suits come in and say no. And I know that makes everybody pissed off. And I get that aspect to it too. So you got to make a name for yourself, regime change, blah, 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 this, blah, 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 that. And then all of a sudden you're back in the same bullshit. The only caveat I would have on that would be if the business so if the Federal Reserve is not controlled by the executive, then you would suspect at that point he has to follow the rules. And if he has to follow the fucking rules, when can he manufacture a reduction of the debt? That brings in does the Fed manufacture a recession or a depression? Or should they be able to? And I don't know. I think that would be met with a lot of no, they can't. So then the bigger question becomes if naturally we do that cyclical stagflation recession, will he step in with QE? And his verbiage has said that he will. He's left the door open to it. Maybe it's just not as drunken as it's been in the past. We have a tendency to overdo things, right? We have a tendency to overdo things with QE. And his issue, too, is that they're not going to need QE. It's not that he doesn't want to do it. They seem to think with our new economy that we're not going to need it. I don't know about that, yes or no on that. If I had to guess, historical example being truth, you're going to get QE. I know that makes people rage. Like, can't we just pull the Band-Aid off? I think people say that to themselves year over year, decade over decade, and it's never changed. I don't know how that changes. I mean, I know how they purport it's going to change. But even they themselves admit that they can't guarantee that that's going to happen. So we got the new high. We're just looking for the nice back test to pick up here at 12 p.m. We should grind up and to the right into the close. Should. This is the basis for the bulls to go up into the end of the day. Just waiting for 12 p.m. flows. I don't know if he's traveling right now. Ooh, that's fire. I like that. On here. Yeah, I'm on a similar thought to that. I see that that major cycle projection. It's gonna be a painful trip up here, isn't it? One hour getting bought nicely here. Okay, so that's your FOMC preview. I got a couple others in here. Let me see if I can. I'm gonna post some of these in the Discord for the pro traders. This is Douchebank's take. Next, we're gonna read Goldman Sachs. No, this is Bank of England. Let me read this one too, and then I'll post it. Now this is on B of J. On here. That's B of E and B of J. Chinese officials are currently working on the release of 70 ships belonging to China. Good job. Makes everybody's oil cheaper. A marine traffic noted that a large cruise ship linked to Russian steel industry billionaires still under sanctions passed through the Strait of Hormuz over the weekend. I wonder who he asked for that. Can you get my cruise ship through here, please? Press conference by several foreign ministers ahead of the Security Council meeting on the Strait of Hormuz. Iran proposed reopening the Strait of Hormuz. The status of key U.S. demands is unclear. Per CNN. Let me just check the 2-year really quick. U.S. 2-year yield. Two years holding up just fine. Hegseth's going to testify in the Senate panel on Thursday on a budget request. Interest rate prep. On air. I'm going to print this. Why did that? There we go. Cranking it up into the close. Cranking it up to the close. Welcome. There's interest rate prep for you. 6 month. So this 2-year high yield 3.81. That's all I've got here. Okay, so I've made my way through all that stuff for Monday. I can't believe my office is stable right now. Knock on wood. Nothing has crashed yet. Oh, wait a minute. That's weird. Hold on here. What is going on here? Hexan's doing a lot of whining today. Let's read a few things here. I'm reading a Gamma briefing from this morning right now in the background. It's pretty much in line with what we're saying here. We got to get up to 720 to roll calls higher, basically. With the backdrop of volatility ramping, if we don't get up there, we should roll to the downside. I agree with that too. On here. Seems like everybody's on the same page. Where are the Elliott waivers at right now? Rubio insists U.S. will not tolerate deal which makes Iran gape. That's all fucking peacocking bullshit. No shit. We already know that. Semis haven't done this since the peak of the dot-com bubble. Not yet. You want to see something crazy? It's still not the peak. Oof. Look at that. They're kind of lying to you here. So they're saying we haven't done this since the peak of the dot-com bubble. What they're not showing you is this part right here, where we smash up, and then we make the big break to the upside here. This is the dot-com bubble here. We haven't even entered it yet. We haven't even gone vertical yet. This is the part right here. We haven't done that yet. You want a good one? I got a good one for you. I'll give a few good ways. Show this to Dr. CS. That's a juicy one right there. That chart, what that chart is telling you is that I gotta break out the fucking one where I show you like all the how all the sock stuff all comes together and the whole market just goes bananas to the upside. We'll read this one. Average 2-year auction is a big improvement from last month's debacle. No, it's just your 3-month trend and your 1-month trend in this stuff. Oh, here's another one right here. Stock market correlations have only been lower in Volmageddon. Dollar breaks the model. Dollar breaks the model. Rates say no, equities say maybe, but relentless foreign buying and record transactions shares scream one thing. The U.S. dollar isn't falling anytime soon. This reminds me of the Asian financial crisis. Calling me shocked. Technicals are turning tailwind to headwind. This was on Monday at 9:30. Microsoft shares slide. Good, let's buy a dip. This is not normal. China's DeepSeek cuts new A model fees again. Probably look at that maybe. Goldman Global Markets looking desperate for a resolution. We'll look at that one. Futures went parabolic. Now what? Let's see what that means. Hedge funds brace for reversal. Dump tech stocks at fastest pace in 2 years. Looks like a breakout. Trades like a squeeze. This isn't leadership. It's forced buying. Yes, we know that. It's not just forced buying. It's now you want to roll higher. You definitely want to roll. You definitely want to roll sold calls higher now. That's the problem here. Monday at 7 a.m., 5 warning signs are flashing. Goldman desk warns set for pullback. I agree. We all know. Let's get through some of this together here. Okay, 5 warning signs are flashing. Goldman desk warns market. Oh, by the way, we got to talk about something else here. Just give me a second here. Yeah. I think I need to go potty first. I've got like 2 huge things to do here. Give me like I have a lot to get through here is what I should say here. I've got probably another half an hour to an hour of this bullshit, and then I gotta do, it's not bullshit, but I gotta get everybody on the same page. I mean bullshit meaning I gotta cut through the bullshit. Because there's a lot of, I got like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 topics to get through. So I got to do them rapid fire. And then we got to move into earnings. This might be a late day. Okay. Give me 5 minutes. I'm just going to refresh my coffee and my water. I'm going to take a quick break. I did leave you a message in the pro channel. Like just give me like 5 minutes here. Push these over here. I just want to be able to get this right in here. You're looking to take that one out right there. Just keep following the fucking lines that I draw. I'll be right back. Give me 5 minutes. I'm going to put the news squawker on for you.
Letter to CEO Pichai, urging him to refuse to let the US government use its AI tech for classified military operations. According to I-24 news report from Israel, Israel approves extension of a special state of emergency in the home front until May 7th due to continuation of the shelling from Lebanon and the uncertainty regarding the ceasefire with Iran. We have put out the article on the feed for you to read through, again from the FT.
Keep on going up. 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 You know that there was some kind of a bull or a bear out here that was trying to think. Some bear thought that we were going to go down here and get it all started early. They're wrong. How does it feel to be wrong? You're going to get your doors blown off. It's okay. Are you making a bunch of money as we go up? We're going up. You guys making some money. We're likely going to pull back soon in a little bit. That's probably a place to get out if you're on 0 dates. If you're in 1 dates, you can go a little bit longer, probably to the end of the day. Okay, let's get through the rest of this. I'm going to do this rapid fire. 5 warning signs are Good, he's quiet right now. 5 warning signs are flashing. The Goldman desk warns market is set for a pullback. Fear went bid, sentiment went offered, volatility spiked, and yet the market is quietly went back to making generational highs. That's how Goldman's Brian Garrett, who takes a quiet victory lap for his call last week on buying calls on most shorted stocks after the CAR meltup and subsequent meltdown, summarizes the latest action in his must-read Sunday afternoon weekend prep note. I will post this for you right now, I think. Maybe. Brian Garrett weekend prep. Where is this? Yeah, where's the actual thing, though? April 26th. Goldman. S&T. Brian Garrett. I got it right here. Where is it not? Let's check this. Ah. Well, this is beautiful. Here went bid. Trades. Okay. All right. Hold on here. I'm going to post this for you right here in the Discord. Oh, yeah. Keep on going. Read. We're going to start here, okay? I want you to read this. When you have chance, read this. This is the GS weekend prep. It's the actual white paper. I'm going to read this to you from Brian Garrett. Fear went bid, sentiment went offered, volatility spiked, and yet the market quietly went back to making generational highs. April, hashtag.
Supply fuel to our planes and now negotiating with us to secure energy sources.
This guy seems kind of bummed right now. He was waiting for the roll today and he didn't get it. I turned him off. It is unclear if participants are excited or disappointed for this upcoming week. Central bank decisions, earning announcements, economic data prints, all of this means ES1 can trade on something other than the latest Pakistan headline. Woo! Or Truth Social tweet. Woo! Would love to have a fucking day off from that shit. Tell me, Brian. A little bit of like, let's get off the fucking news, please. That's Strait of Hormuz. Hold on, so you guys making money out there? Y'all doing okay? Y'all ready to be going up into the end of the day today? Everybody all right out there? Did I lose the stream? Burr, 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 burr. You're getting stopped out. Okay, let's talk about this. That's a good answer. I just said, everybody good? And someone said, no, I'm still using too many contracts and still getting stopped out. Forever trying to fix my issues, still learning. Okay. Hey, what's going on, Princess? Good to see you. Okay, so let's slow things down here, okay? If you're... Stop slamming the buy button on zero-date SPY contracts. Let me start there. Number 2, stops should be... Let's go over a few things here. So you have to like set the plan, right? What you're going to do. You have to like... So if you're... Number 1, I trade a lot of SPY, but I'm looking for like a bottom tick. I'm actively managing, like in, out, in, out, in, out. Some days I can have, I don't show this publicly. I used to, but I don't anymore. And I'll explain why right now. Back in the day, I used to trade zero dates. I used to even show trades. I don't anymore. And the problem is that I don't trade zero dates with you many at all. I don't do it like publicly on the stream. I don't call out when I'm entering, when I'm exiting. I do in private. The reason that we have a problem with this is because of a delay. And there's a delay in when price is going to where you're executing a trade to your brain saying go long or short. And then by the time you're out, and then by the time you get that information on your end, it's been like 5 to 10 or 20 seconds, which can be a world in zero dates. That can be like a major world. So people would get annihilated. So I stopped. So like I trade like that still to this day. I'll be honest with you. Like some days I can have thousands of contracts. Sometimes I'll be like adding all day long sometimes. My point though is that it's messy to trade like that. There's easier ways to trade this. So let's start there. Like the way this system is supposed to be traded, you need to have a lot of money. So what you're doing is you're longing the actual market, not zero dates. You're like buying the SPY like this, and then you're shorting it whenever we're underneath the 1 minute trigger, 5 minute trigger. Whenever we're going down, you're short, and then you're longing the market. Then you're going short briefly, then you're longing the market, then you're going short briefly. I don't know if that makes any sense to you, but most people don't trade like that. Like the masses don't trade like that. Some of you understand this way of trading, but you're a very small percentage. So for most of you, if you're going to trade this, you can correlate this to your favorite stocks. So like if you were going to trade something that correlates to the SPY, the SPY is going up, you can use the SPY or the Qs to say, hey, we're going to go long or short, right? So you could use this by trading stock or stock options if you wanted. Another way that's easier to trade this would be through SPX or even futures. There's less volatility within price, or not price, less volatility within the options chain. The SPY options chain is directional only for 0 dates and 1 dates. They have zero intrinsic value. So they are only good for the directional move, and then they lose their value. So if you have a 0 date, like top line, if you have a 0 date, it's good from here to here. That's it. If you do a 1 date or more, they'll retain some of their value, but they don't have as much volatility, so they don't bring you as much money. And that's like personal. That's like a personal thing. Like you can have a safe trade that only prints you 20%, but it's hella safe. You can live and die by the sword over here with some degenerate gambling with 0 dates, but you got to be good. Like you got to be like in and out, in and out. And if that direction changes ever, you have to get out. So I would always recommend to a newer trader to trade something less volatile, a product, even if we're directionally right, to be in a product that's, and there's a bunch of other factors in this too, like OI and events, and there's a bunch of other shit in this, but top line, there's a lot more volatility in a using like a 0 date or even a 1 date product. What you just said too was I got stopped out. I want to explain stops to you right now, okay? It's an important lesson in stops. So anyways, let's go back to the first part. There are other products you can open. Either a spread, call spread works, where you're not worried about being stopped out, or maybe SPX or another derivative of SPY, or S&P 500, I should say. SPY is a derivative too. That's not as volatile in their chain. SPX is not as volatile, so you won't get stopped out as quick in your mind if you're seeing losses. But let's talk about stops more importantly. And this is the more important lesson in stops. So let's say you should be like, we think this is the bottom here, right? So you're starting a trade and you're in the trade, right? And you're raising your stops. So when you're doing that, right? Let's say these are your stops, right? So you're raising your stops, raising your stops, raising your stops, raising your stops along the way. Let's say we raise our stops right here. As an example. So my thesis is we're going to continue up from here, right? And let's say my stops are broken and we come back down here and we hit my stops, whammo. That is probably the worst place for me to actually have a stop if I had a mechanical stop on. So like we come down here and automatically my position closes. You should never do that. And not only that, let's say we go down here and there's a flush straight down. And you don't have any stops, but in their mind you have stops there. That's the good way to do it, believe it or not. So it's counterintuitive. So you're like, okay, I've got stops down here, but I don't have them on mechanically. I have them on my head. We slam straight down here. You should never like, oh my God, I'm in so much pain. I'm fucked. I'm going to cut my losses here. What they'll do is they'll bring price back up in regardless of direction. They'll give you the opportunity to exit before it continues to go down for a new low for continuation, or for continuation to go up. If you run the same program again and again and again and again and again, and your stops are taken, whether they're taken here or down here, you always wait for the opportunity to get out. So, and what happens is you cut your losses, or you're just like bleeding a little bit, not a ton. You're not taking the full loss where we're going down here. And you can always jump back into, let's say they come down here, they take your stops, and you get out right here. And then you show a new high to go long again. You can jump back in for continuation here to go up, or switch to a seller. Sorry about that. Or switch to a seller if it confirms the move lower, so that you're back to making money again. I don't know how to explain that better, but your stop should be in your mind, not on a mechanical stop. You can have, there are times to have a mechanical stop on. If you're looking for a squeeze up or a bloodbath down, you can have a top mechanical stop in so that you don't get left out, or you can even do it by hand with a market sell, or a market close would be a better way to describe that. If you're going up or down, just closing on a market target, lower or higher, regardless of where it goes, because you can lose money that way too. Like, let's say we're sitting here and you think we're going to squeeze, and let's say it's up here and we're in squeeze risk, and it goes so fast and down that you get left behind. Oh God, it was there, I was making money, now I'm not making money. A market stop above can trigger the only problem to print for you money. But at the same time, if it continues to go up, you're going to lose all that money that you could have made. But then you're like hindsight trading. Well, what if it did this? What if it did that? You're just like, I'm taking my money and I'm out of here. I want you to. There's a big lesson here though, which is it doesn't matter if it's up or down. There's a bigger lesson here, which is, I don't care if you're like coming down to break out, or I don't know, you're going up to break down. I don't fucking care. What I care about is if you're 1, 2, 3, 4, 5, or 1, 2, 3, either one of those, I don't care. But let's say you mark a bottom and you start heading higher. You're beating this first. Simplify this for you. 1, 2, biggest part of the trade right here, smallest part. So you make most of your money in here. You make less of your money, low probability of being the winner down here. Highest probability of being a winner. And you're being a winner here is low probability. Highest probability, about 90% of the time, you're going to be right directionally on the body of the move. It's that simple. And especially past this mark right here. Make sense? And it gets less and less as you go down. Now, on the inverse, you're not taking this trade. You're just marking the bottom. You have the beat of the prior high right here. Fairly simple. You have the back test over here that doesn't go any lower than this one right here. As soon as that begins turning around, this is the second leg right here. Now you're trying to take that trade up here. Okay? You don't care about this part right here, and you don't care about this part right here. You just care about this part right here. Now, let's say we start stalling in this high probability trade, and we start rolling in middle of it. That's going to be very rare. So you already have a bunch of statistics on your side. But let's say this happens. Like, we're middle of the day, something hits the tape that's material that we don't expect, and we blast down. And your stop was right here in your mind, or right here in your mind. And you're losing money and you're freaking out. Maybe it even goes down even more. What will still happen 85% of the time is going to return to the scene of the crime where it first happened. And regardless of direction, up or down, it gives you the opportunity to get out of your trade with minimal damage. Minimal damage. Which is why we do not put mechanical stops on normal trades. And the reason I'm saying that to you with the stop thing is because if you're in here trying to, like, I need to make money, I don't want to lose my ass, and I don't want to get stopped out, and you're like, oh my god, 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 all that kind of stuff. You can kind of get rid of that oh my god stuff and waits for you to be triggered. So in your mind, you're like, okay, we're gonna come back down here. This is gonna be the worst, and then we're gonna go up. And if they pop you down here, right? Like, oh my god, I was making money, now I'm not. You at least wait until you're let back out to exit in an orderly fashion. Now, there are other ways to deal with this. If you're trading zero dates, you could theoretically trade this on a 10-second chart, or just take each leg and you're in and you're out, you're in and you're out, you're in and you're out on the 5 legs. So let's draw 5 legs here. We know a few things. We know that we're buying dips down below. We can buy those. We know that we cannot trade this until we're above it. We need a series of highs to trade it. Right? So we're not there yet. You've got an equal leg up here. Remember, we do these bat wing things where it's like this. Normally like this. You see the bat wing in here? And this is sometimes a double. Sometimes we'll do like 1, 2. I'll draw this better. Can be like this. 1, 2. And then we go up. So it's like two bumps inside of it. It's more bullish when you see the bumps higher than one and the other. It should be the other way, but you get it, right? Like in here. There's your 1 bump. There's your 2 bumps. This implies you're going to do the cup and the handle up to the right. So let's just talk about these 5 waves in here. So you've got 1 wave. One. And there can be waves in more waves. So you got 1 wave. 1, 2, 3, 4, and 5, right? So you can decide I'm only going to trade that leg, that with zero dates, this or futures or SPX. I'm going to trade this, trade that, and then I'm not going to take that last one. This is the most probable printer here. Now this one's going to be your least likely printer, but this could be a bigger leg, a bigger 5 wave, where this is 1, this is 2, this is 3, and then 4, 5. So you have a waves within waves. You guys know what those are, right? So if this is the least likely to print, this is your best trade within this one. But then you have a larger trade up here where a successful back test on this new high, if we get the new high, you would expect this successful back test to be the big boy to go up. So if this is your second wave of your larger wave pattern or whatever, we haven't even gotten to the most desirable trade yet, which is above here. So you can use this too for yourself. If you want to like when should I get in, when should I get out, my waves. And you could also translate this to a smaller chart. So let's look at this leg right here. So like you does this is David AMS. He knows, I already know that even in this leg, the biggest chance of a failure at this point is this last leg. And this has a low percentage of going up and doing the thing. So traders that use probability and statistics on their sides, they won't even take this part of the trade right now. This last leg, they won't. They'll just be like, I'm going to sit it out and wait for the second leg of the next wave. Make sense? Still following along? I hope so. Now we need this to get the second leg as well and a back test to confirm it to go up, which is, of course, higher than we are to trade that 720, which is above this fucking thing right here. Now let's look at this leg right here. See this leg that's in here? if you wanted to like cut down on some of the like I'm trading zero dates or whatever, you could switch this chart to a 10-second chart. I think I have 10 seconds on this chart. Yep. Here's a 10-second chart. So if you had, let's say, 2 monitors, this looks like a huge move, doesn't it? Look at how big that looks. And these guys are getting in on these trades like on 10 seconds. They run this fucker all the way up to the target on a higher frame chart, and then they're out again. Does that make any sense? So this looks like easy street here, right? On a 10-second, but you likely, more than likely, that then need to run. If you're gonna run like zero-date degen trading, you probably have to have multiple monitors and cycle through like a 4-hour, a 1 hour, and then I would look at a 5 and 15 minute, and then go to the 1 minute, and then the 10-second chart. I know that sounds crazy, but I cycle through those on other charts over here all day long. So you would need to learn that system. Hang tight 1 second here. Give me 1 second, guys. Give me 1 second here, guys. All right, sorry about that. So, if you're getting caught up on zero dates, number one, top line, stop using zero dates right away. Just stop. Go to like SPX. Go to there's another one, SPR or something they were trying to push a bunch of years ago. There's not a lot of liquidity in that one. I forget what it's called, but go to spreads. If you think we're trending up all day long, you go to a call spread, make 20%. You do that every day on known we're going up from this number. You should make consistent money regularly. Also, in your top line and your stops, if you get stopped out in your mind, it should be in your mind, and then you should mechanically be implementing your stops. So that's the whole trade thing where they try to take your stops in here, they flush you. You should be waiting until they come back. What else on this topic? You could look at multiple time frames and then trade on a much smaller time frame, like 10 seconds. Like I'm opening zero dates on this tick and I'm getting out on this tick. Would be another solution for you. And then the last solution would be you just go inside the Discord and the Pro channel, I'll tell you when to fucking exit, when to get out. It's one or the other. You can do that too if you don't know. I'll just say get long and then I'll say close. Take your money and run. I literally write it in the Discord and the Pro channel. Yeah, when it comes to like you try to find different brokers for what you're trying to do. If you're trying to buy meme stocks, it's always a prime broker. So you are trying to use a bank like Schwab or Merrill or some kind of bank that has money to back up their options with enough liquidity. But then you want to use like like it depends on what your needs are. Like if you want to trade futures easily, Robinhood. I'm shocked to say that. If you want service, you should have a broker like Tasty or Thinkorswim, someone that you can literally call and they answer the phone immediately. Hey Jim, someone that you can send a Christmas present to, someone that you'll know their kids' names or their wife name or just their name. Hey Bob, good to meet you. Good to see you. Can I get to know you over the years? I'm going to lose a bunch of money with you because that guy is going to help you too. That's a whole nother fucking conversation. So I wouldn't be trying to trade zero dates with Merrill Lynch personally, but the other problem that you run into too is you're paying for order flow once you get out of the prime banks. That could be an issue too. This is the all-time high right here, 1747. Expect some sellers up there. We're going to smash back into 7170. That is the target for today, by the way. The zero date target is 7170. 720 is the target for tomorrow. I'm assuming we're going to grind up and into it today or tomorrow. Remember this prior high back here? What else on zero on this kind of stuff? Like first, broker matters. They don't call you anymore. So if you're opening like a spread, you should have your broker on the fucking phone. If you're trading big enough money with a spread, you can ask for better pricing from a broker that gives support that's not a prime bank. Believe it or not, they'll give you usually pennies for the order flow. I've had brokers refund me. The most of it I've had refunded was 15 grand. Tasty went down when I was skiing, and the guy gave him money back for the trade. You got to know your broker. Yeah. The nicer you are to your broker, the more you remember their name, the more that you say, hey man, happy holidays. It's one of the places in life where honey does much better than vinegar with your broker. But you want to have that for support too. If something goes wrong or you get a bad fill or you get an order flow fill that's bullshit or there's a bunch of different reasons you need a good broker and to be able to speak to a broker. Don't ever trust like Webull or Robinhood or any of those. When those like risk control people contact you, they're not risk control. They just want your money. They want your money. Or they emphasize wanting your money. They emphasize trying to clear you out as quickly as possible. They don't need to be that aggressive. Most traders lose money over time. Not all of them, but a decent percentage of them are the supply for the market. I don't think there's much edge. I would say you need a good broker. And you need to be able to take out zero dates so you can trade right to the close. If you can't, you got to do one dates. Sometimes one dates are good too. I do one day. I flip between zero and one dates. Sometimes one dates or zero dates are excellent, and some days they suck. Even directionally, I'll do a one date. Let's watch that closely here. Like to see this one little pop up here. Right up there, 714. I mean, even 715 would really be the target right there. Like to see that one little push up here. Don't get stopped out of your trades. My point. stops are really like they're almost their own thing, like a whole set of their own rules. Or switch to one dates or weeklies or something, or spreads, or to SPX or futures. The good thing about futures is you can usually get in and out of them pretty quickly. It's not as like shorting is dangerous in futures, but longing isn't usually as dangerous. If I had a preference, for like easiest way to trade, SPX. If your timing sucks, SPX, but you're not going to get the same prints that you would. You're not going to set the same payout as a zero date. That's the trade-off. You're going to make more money in a zero date than you are in SPX. Or at least if you can time it right. There's like a trade-off for everything. If you can't time your bottom and your top perfectly, you might not make as much money. For most traders, SPX, probably the best bet. Or find your favorite stock out there. And those are usually running with SPX at the same time. Or Qs or whatever you're trading. Yeah, you can do that too. You can do longer dated contracts too. Much longer. There's a whole we're opening up Pandora's boxes of things that like would be like 3-hour conversation, 5-hour conversation. We talk about them over time here, but it's a big like it just opens up a bunch of other things. Like the top line is SPX. If you do SPX, it'll be easier. Okay, we gotta get rid of the rest of this stuff here. I gotta try to get through this quickly as possible. 5 signs warning signs are flashing. The general thesis here is I think last week I posted on Twitter a bear saying look at the chart, read the chart. I'm like, no, I ain't reading that fucking chart. How we have to pull back. If this week was to be marked by anything, it would be hopefully the market will switch to econ data, like this guy is saying. Garrett's basically saying let's start looking at some econ data, take the pressure off of the Strait of Hormuz, Truth Social tweets, and move on towards the market looking at itself. It is unclear if participants are excited or disappointed for this upcoming week. Central bank decisions, earning announcements, economic data prints. All of this means ES1 can trade on something other than the latest Pakistan headline or Truth Social tweet. And aside from that, Wednesday will be one of the most concentrated earnings sessions in history. Percentage of market cap reporting below, it's 23%. I believe. No, 23% of the market reports big tech day on Wednesday. Meanwhile, as reported Saturday, hedge funds are hitting the brakes on this rally and aggressively degrossing into all-time highs from the 100th percentile just a few weeks ago down to the 3rd percent on a one-year look back. So that might like the earnings on Wednesday might freak you out in this backdrop, but let me explain it easier to you. So what happens here is, let's say I'm long my favorite stock ticker and they have earnings on Wednesday. So I'm long the underlying, and I am taking some off, as people say, as my favorite stock goes higher into that earnings. And then I leave a little bit on, and or I leave it all on. And if I get the print on the upside, in either case, if I get the print on the ER, on the high side at the closing bell, I close my position long on that stock. The other thing, too, is I can hedge. If I'm going to remain long, I can hedge. If I'm going to take the money and run, I can hedge. So it's not necessarily bearish. It's just we might not get prints on like SPY, like our follow through on SPY. That said, Garrett notes Traders Almanac suggests once stocks regain previous highs following a 10% pullback, they tend to keep climbing that wall of worry. There are 4 instances since the financial crisis where SPX sold off more than 10% from highs and subsequent performance saw previous high regained. It was in August of 15th of February 16, and then February 20th to June 20th. February 22nd to June 22nd, 23rd, and April 25th to April 25th. with a 1 week, 1 month, 3 month returns are all positive and average 1.5%, 5.2%, and 8.6% respectively. I posted this in the Pro channel for you as well. Amid the sudden surge in degrossing, the pain trade would be if stocks continue grinding higher, according to Goldman Trader. To the Goldman Trader, a lot of conversations in the desk suggest investors don't feel long enough if the market keeps going, and many clients' calls have started with a discussion on hedging, then a realization that the book has short beta already, which and ultimately leads to a which calls looks most attractive conversation. The S&P July upside trades at 12 vol, and long upside remains a lonely trade. Here, I'll read the. I'm going to post this. I'm going to post this to you too in the Discord. This is the takeaway from the white paper above. S&P July upside trades at 12 vol and long upside remains a lonely trade. As Garrett summarizes, in a market where you want to be away from the crowd, almost no professional investors are outright bullish, which incidentally confirms that the April melt-up has been nothing but one giant short squeeze coupled with tactical Mag 7 calls. Now, he talks about how hedge funds are degrossing. He talks also about how expect a lot of airtime around pension rebalance data. Goldman has $25 billion of equities to sell on month end, the biggest on record. Pension heirs are on course to sell, what, 23 or something, or 30. CTAs have been most important driver of money flow since the start of the ceasefire. GS Futures Desk suggests this is complete, having bought $170 billion of equities month to date. S&P gamma positioning is in rare air. GS calculates has Daler's extremely short gamma to a breakout in spot. I am watching that in the background right now, but it can also turn into a spot up vol up scenario too. In this scenario, in this setup, call vol should carry extremely well. July calls trade on a 12 implied vol handles. One of Garrett's favorite trades out there. Spot vol correlation should work in your favor to the top side. His top trades, long SPX calls, outright, or on a heavy delta for synthetic put. Long USO downside spreads as things get shorted trade. VIX calendar puts, long May, short June, to play the curve for curve steepening. Long emerging market equities, prefer Brazil and Korea. Short Europe, short GBP. Macro implications from Europe with Brent 85 plus. KO puts and SPX screen cheap. SPX lower, US yields lower, screen cheap. But while Garrett is still sniffing out levered upside opportunities as a result of his view that bullish positioning still has a ways to go before it becomes stretched, another Goldman trader, John Flood, is far more cautious. Flood writes in his weekend recap note, with the S&P 500 at another fresh all-time high, the market has been able to successfully digest major geopolitical distractions. On that note, over the weekend, the U.S.-Iran face-to-face meeting in Pakistan was abandoned. Q1 earnings are off to a solid start. We are stepping into the earnings gauntlet this week, with 44% of S&P market cap reporting. Google, Microsoft, Amazon, Meta Wednesday, Apple Thursday post-close. Buckle up. I don't know if it's so much buckle up. I think it's more like, let's take the money and run. Like, let's get the squeeze up there, get the calls rolling higher on good earnings, and then we sell into them. I think none of, like, I don't know why, but like this seems to make sense to me. Like if you're an option seller out there, it just makes easy sense to say trade up into 720 or 7200. You get a few bumps higher from rolling calls. Maybe we get up into like near 730. I don't want to say that, but let's call it like 726, maybe 7260. And likely on spikes on earnings. And then we're selling calls up there to suckers. That seems rational to me. And now we only have so much time to do that. We got FOMC on Wednesday. We got a bunch of potentially negative data coming out, and we've got big earnings coming out. So you'd probably see those highs into, Tuesday close. Maybe another spike up into Wednesday. And then we're still selling calls to suckers. In both scenarios with both of these guys, the bear and the bull in this weekly outlook, I think they're both still closer to the same in their expectations. Next one is looks like a breakout, trades like a squeeze. Breakout long leaders. Let me see here. Semi-stretched? I don't think so. I think semis are looking for a breakout, like late 1990s. They're looking for it to cave. They're wrong. Hedge funds brace for reversal. Dump tech stocks at fastest pace in 2 years. I'll post this one to you as well. No, I'm not going to post one. I'm just going to read it here. Under the surface, fears the market has topped out were evident everywhere, according to Goldman Sachs trading desk. I don't think so. I think we need to go higher to roll calls higher. They've been selling calls at 7,000 since October, and they've been selling calls at 710, 715, 720 since October. I even think call sellers at this point want to sell them higher than that. I think you got to look back to October on this. I think it's just a general feeling that you want to sell them higher. A better buffer. Semis went parabolic. Now what? That's the next headline when trades work too well. Expectations going vertical. Stocks earnings forecasts aren't just riding, they're chasing price higher. You're paying for perfection. Well, I'm just reading through some of this stuff here. Maybe the street is fearful we're going to start the last leg of the bubble trade soon. I think there's still more time for it. I think we can wait. I think we can wait 3 months for it. Global macro markets are desperate for a resolution. I agree with that. I think they are desperate, but I don't think it matters to our markets now. I think it matters farther down the road. Says this is not normal. China's DeepSeek. Yeah, they're just trying to fuck the U.S. Technicals are turning from tailwind to headwind. Warns from here. Risk reward looks worse. Let me post this for you in the Discord too. This is the week ahead. So tomorrow marks exactly 2 months since the strikes on Iran began. DB's Jim Reed writes, while there is currently a rolling, open-ended ceasefire that started on 8th of April, the risk of it collapsing at any point remains real. Just as the weekend news looked like it was leaning negatively, though, last night's reports came through that Iran have offered the U.S. a fresh proposal to open the strait and end the war. However, Axios and others reporting this proposal postpones talks on nuclear capabilities, so it's unclear whether the U.S. admin would tolerate that. But for now, the market is trading better than it might have done to start the week. I had us going up today. A fresh development follows Trump canceling a planned visit to Islamabad by envoys Kushner and Witkoff, saying that the Iranians had offered a lot but not enough. President Peshkin, meanwhile, said Iran would not agree to the imposed negotiations under the threats or blockade. The coming week will no doubt bring further developments, though predicting them is close to impossible. When the conflict began, I bet you fucking we'll get some bad news around 7:20. 7:26, 7:25. Almost guaranteed. If you sold calls, I bet you'll manufacture the news. Almost guaranteed. The market reaction has largely played out but for the wrong reasons. The conflict is not over. True. That said, the markets still appear to price in a meaningful chance that it will be resolved relatively soon. Poly market, for example, suggests 56 probability of traffic returning to normal by June 30th, although this briefly touched 91% 10 days ago, and then it appears that Iran was reopening the strait. Keep this here for you guys. We got to move this up. Hold on here. Another news, one notable development yesterday was Tom Tillis's decision to lift his block on Warsh's nomination. Terms of overnight markets, Brent was up. It's down now, though. Looking ahead, the central banking meetings for every G7 country this week, alongside 42% of the S&P 500 reporting by market capitulation, including 5 Mag 7. It is shaping up to be a blockbuster week, even before factoring in ongoing Iran war news flows. The Bank of Japan meets tomorrow, followed by the Fed and Bank of Canada on Wednesday. If you want, I'll post you some. If you want some B of J and B of E, if you want a B of J and B of E previews, ping me in the Pro channel and I will post it for you. From an earnings perspective, 22% of SP capitalization across just 4 companies. Reports after close on Wednesday. Turning to the Fed meeting, I already told you what Douche had to say. Alongside the meeting, Thursday's personal income and spending report, and particularly core PCE, will be equally important. Income is expected to rebound, while consumption is forecast at 0.5. Of course, the deflator should be increased by 0.25%. That means the markets have to go up. Other data ahead of the meeting is unlikely to materially alter the Fed's decision. That's data ahead of the meeting. After is when it becomes important. Starting to break out right now. Give me that squeeze, baby. We're back at that squeeze level. Hold your panties. Give me some of the hot news. We got Levitt on right now, by the way.
So surely expecting the rest of the data now for the 5-year, and also expecting the 3-month bill auction. So 5-year note auction 3.955%, 3.955%, with a bid cover of 2.33. The US selling $70 billion in 5-year notes, awarding 61.04% of bids on high. Primary dealers take 12.68%, direct 15.03%, and indirect 72.29%. US 3-month bill auction data coming through with the 3-month high yield of 3.590%, 3.590%, and a bid cover of 3.09. So the US.
If you're one of the kids, this is your place to get off the bus. Get off the party bus. We're about to open the fucking bar.
So the US awards 36.78% of bids at high for the 3-month. It's again the 3-month bill auction with awarding 46.78%.
I can't hear that for some reason. I don't know why. Hold on, I gotta be able to. Hold on, I gotta listen to this. How do I even listen to this? For some reason, I can't listen. Hold on, I'll play it on my phone. I don't know why I can't listen to volume. Let me open up Discord, not Signal, Discord. Hell yeah, Freddie Stacks.
US 5-year Treasury yield rises after auction, last up at 3.952%. And White House press briefing has now started. A reminder, the video is on the feed for those interested.
Note that we're in rejection zone, and we've been rejected here like I don't know how many times. 7. Just note that this is where we reject. I think we can go up a little bit higher. I think we can go to like, personally, I think we can go to right here. Ish. We can go a little bit higher. I'd like to see us pop up of it. It's a little pop up here. Even when we pull down. Just a little, just one more pop. A little pop-a-rooney up here. I just want to warn you too, if we do pop up, there's gonna be a lot of rage. This is where the no lube zone right here. No lobe. You take their stops, you're gonna have to pull back before we go higher. First thing you're gonna do is take their stops, and then we gotta, you take their stops, then they're gonna get a chance to get out before we go up. I think. This is now higher. You just gotta trigger their stops first, and then we'll do it. Good job, Freddie Stacks. You could theoretically say the closing price will be 714.73 too. There's another argument that we go up here, we like grind this all day long, slam down, grind the 73 up here at the close. This is later in the day, of course, but then they don't push us up until after the close today. Potentially. They make the move after the bell. We don't break out frequently during cash market. We do most of our moves after the bell. Remember that the safest trade is after a breakout and a back test. Safest trade here is you go up, and the pullback to go up there. This is usually a better trade down there. Also note that most traders are safer either do it like waiting for the breakout and then the back test to go higher, or way down here to go higher. This will be a good lesson in stops right here. We'll watch this together. Nice setup for stops. These are your stops in your brain. We're going to find out if we flush early, we flush later. I think we flush later. I think we pop up here. And then we're down there in the middle of the day. Watch this closely here. Try to make sure we hold right where we are. Watch this. They're going to try to take your stops here. They want you out if they're going to take the no lube. They don't want you chasing this up. That's the simple answer. They want you chasing this, so they want to take your stops, run it up there, and then you buy, and you're the supply. Yeah, that's still it right there. Just watch the high from the prior hour. High from the prior hour was 714.12. So right here. Right there. You want to hold this fucker right here? Looks like Levitt's speaking. I don't have her on right now. She hasn't said anything yet that even Financial Juice thinks is worth posting. That's good. I'm not putting her on.
How might we respond to this hate mace? We punish them, yes. We punish them with a hate mace enema. But no lube.
That's so fucked up. We punish them with no lube. I hate enema. Yeah, it should be a pop and drop. We should just pop up here into 130 and then roll. Oh. God, look at that. VIX 9-day just wants to collapse right now. Come on, VIX 9-day. Just fucking let it all hang out, dude. Just give us this fucking... Here you go. Get up there. There you go. There you go. Go ahead. You know you want to do it, dog. You only got like a day left, man. You got like one more fucking day. We're all waiting. Just want exciting bulls. They're all buying calls for earnings on Wednesday. Take the money and run. Got to get those juicy, juicy calls to sell. It's higher, bro. Got to make them juicy. Price it in early, baby. Just a quick little pain. There's a little bit of pain up here. Give him just a little bit of pain. Not asking for you to go straight to 720. Just break above 7170 for a minute. Keep your eye on SPX 7170. You know, that was painful right there, wasn't it, that new high? That's a hate candle right there. It's another hate candle. Spite candle. I cast spite on you, bull. This one right here. Theoretically, we got the new high. We don't need to actually hit this new high right now, so it might be after. I'd still like to see the break of this. It's like right now it's like 17, 16. This changes throughout the day. This yellow one is a moving target. This happens to be the target right now. Say anything in there. 17, 14, 50 or 17 or 15 would be the nice place to do it. Even 1750. We'll see if we can get it into 130. If we can't, we'll look for the roll. You could say that that's enough of a high right there, that this is the high, because it was higher than this one. So we don't need to hit this now. Okay, so here's the stops right here. Watch this closely. Now, do you see how your stops are taken here?
According to the Wall Street Journal, at the UN,
Watch this closely here.
calls for a coalition of maritime freedom on the Strait of Hormuz.
More than likely, if the guy that made a comment earlier gets stopped out.
Nations to build a coalition of maritime freedom.
So here's where the stops are taken, or theoretically, I would think that you have stops there. So the question becomes, what do I do here if they've triggered my stops and I don't have mechanical stops on? What do I do here? So I'm going to explain what you do. This is theoretically you were long before we ever got here, and you're long, let's say, from right here. Let's get rid of this one. So you're long from lower, and you're like, oh my God, my stops have been taken. What do I do here? You have to ask yourself a few questions. You ready? Write these down at home. Whoever that you were that made a comment earlier, this is your time. You're going to write this down. You ready? My stops were taken. Okay, stops taken in my mind. Just write that down. Stops taken in my head. The second thing that you're looking for is, has the 1 minute trigger crossed the 5 minute trigger? Just write that question. Has the 1 minute trigger crossed the 5 minute trigger? Write that down. The answer here is no. So what you're looking for is an exhaustion candle. So watch this right here. You got your low. Right? This took your stops. They give you an opportunity to get out right here, so you can see it.
Extend gains. Brent crude at $4 a barrel to a 3-week high on stalled US-Iran talks.
You're given the opportunity to get long, but you still have not put in the second low, right? Still have not put in the second low. You're not underneath the 1 and 5 minute trigger crosshair. See that? So it could be a little bit early, right? So you're watching this candle right here. Is that an exhaustion candle or not? Doesn't look like it to me. An exhaustion candle here would look like, oh, let me just draw this in a little bit different way. This is your 5 minute trigger rolling down. So this is predictive, right? This is your 1 minute trigger potential to do this. See that, right? So then you switch from, you get the big red, you get the dump down here, new high. And they take your stops theoretically in your mind right there. And now you're watching this candle right here. Is this candle small? Is it not full? Is it like a wick with a bigger body under here? It's showing you sell pressure on this next candle, which it is not. I'm letting you know. It is not. That's not an exhaustion candle. You have this green candle right here. You have less than a half back candle green right there. You have another green candle here that says they're still alive. The bulls are still alive at this point. Now, let's say your stops are taken. You're still long at this point. You're not crossing the 1 5-minute trigger. That's not saying to get out yet. But let's say you got an exhaustion candle. So let's say this one is a wick. Like this. Like that was a wick. And this one was a big red. Big fat red down here, new low. That's not good, right? And you're going to see little green candles in here, like a green one in here. Oh, there we go. Keep on going.
So Levitt says Trump discussed Iran's proposal with the team today. And further saying Trump has met with national security team this morning.
Hold on here. Now, if you had seen wicking green candle, more red, and then more failure green candles,
and Levitt says we'll hear from Trump.
and you put this low in right here, wham. Okay? So you've got your first low right here. You got your second low right here. And this is the low that I'm talking about with exiting with only cuts on yourself. This one right here, this new first low, second low. You guys don't want to watch this, do you? No matter where this goes, down here, I don't care wherever it goes. I don't care if it goes right here. I don't care if it goes right here. You're still going to be given a chance out. It's still going to revert up here. Right where your stops were taken originally, before the roll to the downside. So it says to you, if you're getting stopped out, the process for you to get stopped out is a big, long process. And you need certain things to happen for you to eventually get out of your stops back here. Like you need exhaustion candles, new low, and then you're up here trying to get out for the larger trade lower. This back test here confirms that the way is lower, and you would get, you would cut your longs, or you would.
The Fed chair renovation.
Does that make any sense? And this kind of here kind of like answers the upside stop question that I had for you earlier. When we get into a squeeze zone, you put upside stops. Hold on a second here. How them 712s doing right now, boys? Let's go up here and look at this. Let's go up here and look at this fucking thing. Okay. So let's look at this together as a group. We'll make it easy. So what we're going to be looking for here is this right here. We're looking, like, I'm being a little overly dramatic here. But it was more so for what really matters, which you want to see like the smash above, right? And then we want to buy the fucking dip to take that trade. Does that make sense? So we're getting off the bus up here, buying the dip to trade that up there. Does that make sense? Everybody clear on this? So we're looking for a trade back to the hourly trigger off of the two highs above 7170. Does that make sense? Yeah? Hope it does. No? I don't know. We're going to smash this out, 1, 2, and then we're going to look for the dip to buy, and likely they're going to send it up in the after hours. Make sense? Anybody got any no lube music? Just me? 12 of you. We're the only 12 people. Probably we are the only 12 people long in the market. What is this? No lube rude? How about no lube beam? Got any audio? Hold on here. I think I've got a good no lube song. You ready? Yeah, there it is right there. My favorite. Fluffy unicorns dancing on rainbows. Pink fluffy unicorns dancing on rainbows. Pink fluffy unicorns on rainbows. Fucking unicorns. Rainbows. Pink fucking unicorns.
Let's test your knowledge and see what you've learned so far. What color are the unicorns? Pink! Where are they dancing? Rainbows! Please use one word to describe the texture of their magical fur.
And hold on.
Yeah!
Pink fluffy unicorns dancing on rainbows. Pink fluffy unicorns dancing on rainbows. Pink fluffy unicorns.
No loop for your bunghole.
Pink fluffy unicorns dancing on rainbows. Pink fluffy.
She did question my sexuality. I'm like, if I was gay, I'd tell you, man. I would love to have sex with men. It'd be so much easier.
Pink fluffy unicorns.
It's always so my mom. I'm like, I'm heterosexual. I can't get laid. I'm like, if I was gay, I'd be proud of it. I'd be fucking loving life. I'd be getting laid all the time. Yeehaw! Oh yeah, yeah. There you go. Keep on going. Show me some of that PT1 at 7:15.94. Squeeze their balls off up there. Dun 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 dun. 7:15, we should see some sell flows, light sell flows here at 7:15. If you want to get off the bus now, this is an appropriate time as we come into 7:15. For the rest of you that are looking for the next two highs above, price target 7:16 up here, trading 7:14.94. You should expect a little bit of selling on the 0.5 or 7150. For the rest of you are looking for two new highs to buy a pullback on. Oh yeah, right there. Get on out. I understand. Get out right here. I'm telling you right now, just get off the bus. We left the kids and we're letting the adults off. You guys all fucking rich now again? You guys happy again? I take 1 fucking week of breaking my dick and fucking sitting here trying to do this office shit. You guys need me 24 hours. Oh, shit. I just got cut off. God damn it. No. 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 Please, no. Fuck me. They hate me. There's like somebody from the streets like, fuck that guy. Turn his shit off. Cut the feed now. Come on. Oh. God damn. Oh. Fucking Christ. Oh, that's gonna make a perfect clip for like fucking TikTok or something.
Weakness in the dollar and a bit of weakness in WTI crude.
Oh yeah.
Headlines, but a reminder, we just had
Oh.
a press briefing where Levitt said Trump discussed Iran.
Ooh yeah.
That the US is considering Iran's proposal.
Oh God.
From Trump soon about Iran.
Let's take a look at today's charts and see how we did down here. Let's see how we do today. Down, right? Oh, we got down right here. Down. I mean, I don't know what else you need. What else you guys need from me? We doing okay here? Down, up, 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 up. Okay. Like, we need 100%. We need 251 fucking days, Cap. No days off for you, fucko. Oh, man. Yeah, it's been a brutal few weeks. I'm laughing because I'm not laughing. Yeah, but I'm laughing because of the pain. I'm laughing because of the fucking pain. That laugh comes from a lot of pain. And this last part with the camera going off is even better. It's just like choice. I didn't get into that today. Like, I'm on a plan right now. Winky's got me on a plan. Every time I can't solve shit, Winky gets involved and he's like, okay, what's wrong? And I'm like, well, I'm in an 8-hour rabbit hole doing this, and an 8-hour rabbit hole doing that, an 8-hour rabbit hole doing this. Like, dude, one of these rabbit holes, like the solution, like was a solution, but it's not the solution. So the solution works, but it has like 700 downvotes and like 2 upvotes. So what they're trying to tell you is that's not a fucking solution, and it's not. So I'm finally on a plan with Winky, but it's pretty bad because it means that more than likely that 50-80 is not working. I'm having, they didn't put it together right. They put a little bit too much paste or not enough paste or whatever the fuck they did. It could be software related too. It could be Microsoft too. And it can be Chrome. There'll be a lot of reasons I'm having problems. And I'm still having them. Less problems now, but like switching from my from plug-in capture cards to dedicated like 4 capture card PCI slot. It's like $1,000. It's not cheap. I'm trying to source one that's used. They've been out for 10 years. They're still $1,000. The part that I need, the mechanical part. And then I got to bring the computer back to Micro Center. I was gonna bring it over the weekend, but the delay is too much for me, so I think I got to do it myself. So I don't know exactly where I'm at with that at the moment. Streamlabs stops at unicorn music. Yeah, we're likely going to get a roll up here, so be aware. So let me just take you back up here for a minute. So this is SPX, right? This is an hourly candle. Let's go to a 1 minute. I want you to look at this on a 1 minute basis with me. So basically what we're going to do here is this. Don't look at this line here. This is an hourly basis, okay? We're on a 1 minute right now. So what you're looking for is you're looking for the one move higher, a back test, one more move higher, and then a sweep lower to the hour. So it's not as pretty as you think. So see this half an hour trigger coming up right here? What you're looking for is, let's just get rid of this because you're gonna think it's this, but it's not. You're looking for this, and then a sweep before higher. Make any sense? Whether that's now, later, or whatever, I don't care, but I want you to remember that this fucking sweep is real right here. Like, you only need the two highs. That's it. That's Poop Mountain. And then what they do is they flush you and take all your stops, your panic shit down here. And then you get the move. So there'll be like consolidation, usually. Watch me be wrong too. Watch me go straight up. But in most cases, when you breach this, you are looking to trade this zone. Do you see how like do you see like a brace? Do you see this right here? There's another example of it. Push up, right? There's your second high, 1, 2, right? And then you're waiting until a flush. It's always lower. So the same thing applies here. Sometimes we can squeeze straight up to the whatever it is, which we did right here. We squeeze straight up. Sometimes we do. But in this case in particular, I think it's gonna be more like this, and then a sweep lower, and then we do the thing. I don't think we're gonna keep squeezing here. But I want you to be aware that you should get one more high in here. Should. And then you should see a sweep somewhere in the middle of the daytime. Like 2:30-ish, 3:30, somewhere in there. Somewhere in here. This half hour trade will come up and meet it. It's somewhere in there. We'll be buying that right there, okay? So try to get out. There's one more high likely here. Anyways, you guys get the gist, right? I think you guys get the gist. So you might catch one more high or an equal high like this. One more equal high. But this is a high, equal highs. It's kind of full, like see the half hour trigger down there? And that's the real move up right there. Something like that. Okay? Out here. Oh, fucking thing over there. Come on now. Sorry, I was trying to put half hour or hourly marks on the for flows. You want to try to get out here, either now or in the second high. It's getting a little long in the tooth here. We're gonna roll. You might get one more leg up here, but you're likely gonna roll into this 230. Fairly good chance of it. Then we'll flush it down here, and then we'll take the trade up. Dude, I got yelled at by I was gonna say her name. I almost got yelled at by my wife. Doggone it, because I tried to give her the I tried reading up on the I tried reading up on the what's the thing? Oh, hold on. I'll just type it in the Discord. What do you no? I did blame you though. I did. Well, I looked him up because I was like, I know they use a lot of manipulation techniques, so I'm like, oh, I'll look him up and see what. I was like, oh my god, I could totally use that on Aaron. Oh, I shouldn't have said her name. Fuck. I'll be quiet. She wasn't having anything to do with it. Either she's had a lot of people use pickup lines, or I just suck at delivering them. It's one or the other. She did agree though to go to she did agree in theory to go on a Mother's Day trip with me. I can't figure out, I'm still up in arms right now about what to do during Mother's Day and Memorial Day. I was thinking of doing something different than movement this year. Oh my god, yeah, that would that could work. The reset the right way, it could work. Well, I just didn't know. I had never like looked up the pickup artist stuff until recently, and then I looked it up and I was like, I can use this on my wife. But it didn't work out as well as I thought it would. The one that I used this week was I just do me. I'll explain it later, not on stream. Blow on it, taking blow on it. I know it is blow on it. It really is right now. I'm making this everything I'm doing here, I'm making so complex that it can't break. So this is where the crux that I'm in. I'm in the same place that I'm at with my microphone. So I own expensive microphones. Like I have an XLR kicking around back here. I could use the XLR microphone and my voice would sound great. The amount of effort and money I would have to spend for that to happen is like for the better mic is obscene. And it opens up a Pandora's box of complexity. I'm open to it, but it costs a lot of money. Like for my audio to be next level, probably will cost me 15 or 20 grand, somewhere in there, to do it right. A lot of people have good, like they'll have the XLR, but they'll have like a shitty mixer, physical mixer. And then they don't have all the other stuff that you need, like suppressors and compressors and all that other shit. It's like there's ease of use case, and then you have to be like forced into that new equipment. And on the compute side, I'm there. I'm at the place where things are getting so complicated that the basic shit isn't working anymore, so I have to step up. But that step up is insane. Like I'm amazed that the parts that I want to buy are as good as they were 10 years ago. So this is stuff that's like, you get an XLR mic, it's good for 20 years, which is true. But once you make that jump, it's like, it's still fucking huge money. I posted a picture this week on Twitter of a camera, And I was like, well, if I'm going to start doing this, like now I'm starting to talk about putting like a 580s in a PC. Like literally, like I think I can put like more. I think I can add. I can make this thing so fucking beefy that it's like a full on beast, but it's a bunch of money. It's like it makes just one rig like 10 grand or something stupid. And then of course I have to rip all that shit out to upgrade later on, which is fine. That's a good part. Like I can keep like that PCE slot card. I can like keep that for the next iteration of this, but I got to make that decision. And if it's going to be this complex, it has to be much more robust in what I'm doing. Watch out for, they're going to try to roll us out of here. We might get one more equal leg and then roll. They're going to look to flush this down to the half an hour hourly trigger. Also note here that this one right here, what made that one important? I forget what that made that important now. I don't know if that's important, but more importantly, this half hour trigger, you want to watch this into the close here. It should be up here. This half hour, we should blood only to like right here. We should go up here and then down here and then up. Should be something like this, okay? So watch this stuff here. This is the one, the tick, the dotted ticker is, or dotted line is the 1 minute. Should be something like this. And then like that. Remember, these are different expectations. I'll just show it to you here. It's right there. So kind of like next new high right there, and then down. And this half hour trigger should come up here and pick this up around 2:30, 3:30, somewhere in there. Could probably stretch this out a little bit. And this is 2 p.m. 2:33 is somewhere in here. And this should catch up into the end of the day. Just draw it like that. Just watch the fucking dotted line here. I haven't tried that one. I'll try it on her, though. I got to do it under the right circumstances. I think my wife would approve of you. That's a good one, too. I just didn't know the whole manipulation part of it. I read it all like a week or two ago. I went down the rabbit hole of the pickup artist shit. I was like, oh my God, these guys are brutal. These guys are gnarly. Like, I always heard that pickup, like, people used to hate pickup artists. Then it became like a popular meme thing on the internet, like social media. And people were really against it. And I didn't know exactly why. And then when I read about it I read about it like 2 weeks ago or something. And I was shocked at how manipulative it is. They don't hate it because it's, people don't hate it because it's trashy. They hate it. The people that understand it, they hate it because it's very manipulative. It's very, it's not nice. It's mean, but you know, I've been there. I've been very mean. Dudes do stupid things when they're young. It's not like, now I know why it's mean. Because I had to read about it and I was like, oh God. I was like, these guys are using like some of the worst tactics in the fucking world that work. We might not even get a drop. It could just be a matter of grinding. There shouldn't be an actual drop. It should just be like, you know, it's right here, you know. It's up. You know, there's one. There's beginning of Poop Island. There's two. And this is your Poop Island right here, right? So it's just a matter of when do we go up. You've taken their stops at this point too. So they're going to be given the opportunity to get out of that for the trade higher. So, or theoretically, they should be given the out. So somewhere in here, this half-hour trigger will come up and they'll start ripping faces off. We'll price all this shit in. Okay, let's get past that. I'm gonna give you one more weekly. I think I went over all this enough. I don't need to. But if you want something that's more of a rough outline of what to expect this week, yeah, I want to fucking... No, okay, I won't. All right, fine, I won't. If you want, like, one more weekly, like, oh my God, so much shit's going on. How do I keep track of it all? This is the weekly preview. It's big, it's long. It's long, it's huge. But if you want to read it, you can. If you want to track it as the week moves forward, that's the blockbuster week ahead. I want to read something to you quickly here just to give the dollar update. I know that watch out for the roll up here. You see it? They're trying to roll it right now. Just keep an eye on that right there. I know the zeitgeist is like the de-dollarization is going to be the end of the world. If you look that up on YouTube, just look up de-dollarization. It's like every shit-talking fucking doomer that's got 1 million followers, and they just sell you this doom constantly. Everyone is waiting for the dollar to crack. It hasn't. Correlations have broken. Rate signals misfire, and de-dollarization headlines pile up. Yet the USD fails to fall, held up by persistent capital inflows and record global demand. Record global demand. I go on record here being the only motherfucker in all of fucking social media I've told you since day fucking one. And I've told you this about the bubble, that something is going to happen to the dollar that is very similar to the Asian financial crisis. Now, I'm going to read it to you as it happens now in real time. The U.S. dollar refuses to fall, held up by persistent capital inflows and record global demand. The top part of the K-shaped economy is keeping the bubble alive, and global demand. And nothing right now in the world, no matter what you're reading on Reddit or on Twitter, or no matter if someone from Europe or the Asia or Australia gets mad at U.S. policy, which they should be. But if they're mad and they're telling you, fuck you, we ain't spending any money in the U.S., I'm going to tell you the fucking truth. And the reality is that the safest fucking place in the world for money is the goddamn United States of America. And when you have like a voter will tell his wife, I'm going to vote like this. And then they get in the booth and they go taxes. Whoom, and they yank on the trigger. And they go, I'm voting for no taxes. And then they put a bunch of votes in for other people and say, I'm going to vote for these other people that are going to help us with our social things that I tell my wife about. Now, I don't do that, but I know a lot of men do. A lot of my friends do that. And they admit it to me. They're like, well, then I voted for this and that so that we could, I voted for all these other people so that they don't do anything crazy, but I don't want to pay the taxes. It's a very common thing. So the same thing applies to the world. I'm angry, fuck you, fuck USA, but in fact, their money, they need to save. And the safest place to save it in the world, and if you create crises in other places, sometimes we have the fucked up effect where money flees to the U.S. In our past bubble, the dollar actually rose, and the markets went vertical. And it was one of two very rare situations where the market went up and the dollar went up. And right now the dollar is being supported because there's money flows into the United States in a time when the zeitgeist is against it. I'm angry. I'm angry at the U.S. I'm angry at Israel. I'm angry at this. I'm angry at that. And it's everywhere. But in terms of the stank market and our bond market, that is not what's happening under the surface. I know that the zeitgeist tells you that is not the case, but it is the case. Most FX fell against the dollar last week. Following, you don't have to see the chart, but the currency market data from 2025, last 2 weeks, and year to date, most major developed economy currencies fell versus the dollar. Most specifically, most recently, last week, the euro now once again down on the year. Only the commodity-sensitive Australian dollar is up solidly against the dollar this year. Almost every major EM currency was down last week, with only the commodity-sensitive Brazilian real holding stable. The dollar's recent rally has exceeded movements in rate differentials. U.S. dollars is exhibiting historically high sensitivity to combined moves in both the S&P 500 and oil. In recent days, the dollar has decoupled from U.S. equity relative importance. Beta relationships, the FX relationship to nominal rate differentials specifically, has broken down in recent months, while the relationship is real and to real rates has remained more stable. While at a surface level, Euro USD beta to nominal rate differentials has flipped to being negative in March and April, isolating 4 rates-led moves specifically still produces a more typical positive beta in April. We think this argues for rate-specific shocks, including, for example, at next week's host of G10 central bank meetings, to generate similar FX reactions in normal times. Failed to fall. Looking at the longer term, the U.S. dollar has failed to fall as foreigners have bought up huge amounts of U.S. assets. That's the flight to safety. It's kind of like when you're looking, or you're angry, or maybe you're angry, but then you look at the Strait of Hormuz and you say to yourself, this is bad. Right? We're all saying that, right? But then you got to figure, if you're in another country saying that too, and you have a flight of safety of money in your currency, which country is likeliest to win and likeliest to be least amount impacted? And when you look at our oil situation and our commodity situation in the U.S., it's a little bit more freer than a lot of the free world, right? Not all of them, but let's think about it. United States dependence upon the Strait of Hormuz being open is probably the least out of the free world, right? If there was a nation, and the dollar is still number one. So we can yell, scream, fight, get mad, and whatever, but when it comes to real wealth, if you had to protect your money and you're in another country, where would it be? It's in the United States of America. Even if you're mad with the United States, even if you're an American or from some other country and you're mad at the United States, the safest fucking place and the most likely winner is the United States of America. So if you're going to put your money in someplace safe, if your country is at risk, where would it be? You'd run, right? You'd run to the safest place to put your money. Even if the U.S. were to be impacted in 6 months or a year, you still need to outrun your own country heading into a recession and chase in the United States. And if everybody's in the United States trading the U.S. markets, where do we go? Dollar goes up and the market goes up. And they're also buying treasuries. They're buying treasuries and U.S. equities. We see this all the time, right? Big money, big elephant money runs from place to place to place to place. This is now coming to fruition. The opposite of de-dollarization, USD portions of international transactions rose to a record 51.1% in March, up from 49.2% a month earlier, according to data compiled by global financial messaging service SWIFT. They tend to turn together. The dollar and U.S. equities' relative performance tends to turn together. Shocker, right? So on the dollarization, go on YouTube, type in de-dollarization, then find the top 10 videos, go in there and say, suck my balls. Say, per my boy, Captain Jim James, I can't believe you have a million views on this video, and you're wrong yet again. You tried to sell me fucking sizzle. Next thing we're going to address here. Stock market correlations have only been lower in Volmageddon. Intramarket correlations in the U.S. have been lower than in the period prior to 2018's volatility spike. In stock market sell-off, the VIX is back below 20. Quite a feat when you consider there is still effectively a war going on in the Middle East, and one of the most important commodity arteries in the world remains functionally closed off. This is by Simon White. There is perhaps a whiff of complacency in the air, but not quite as much as there was in 2017 and into early 2018. This is when the VIX reached its ultimate low, lower than in the foothills of the financial crisis in 2006, or in the mid-1990s as the U.S. began to boom. One important factor of complacency in the underlying macro fragility can be seen in correlations. Collectively, the average pairwise correlation of SP stocks as well as the S&P sectors and factors based on Bloomberg's main factors to watch have only been lower in the run-up to what became known as Volmageddon, when volatility exploded higher in early 2018. God. Again, this is quite remarkable. In the light of today's geoeconomic common drivers, such as energy shock, that one would believe should be leading to rising correlations. Back in 2008, 17-18, stable macroeconomic conditions and interest rates still stuck near zero met a fashion of shorting volatility through various products such as XIV and SVXY, inverse VIX ETFs. As vol fell, speculators had to sell even more to get the same returns per point decline in the VIX. Such ETF products are less popular today, but still make no mistake, there's plenty of short vol positioning out there through put selling programs, risk parity strategies, and dispersion trades, etc. In 2018, the short vol trade became very crowded until the inevitable reckoning came. Stocks fell 4% on the 5th of February 2018, causing the VIX to jump. Inciting massive short covering in the volatility index as ETFs were forced to rebalance in the close to maintain their target exposure. The VIX peaked at over 50 on an intraday basis. Why are we talking about this right now? Do you know why? We did not have an unwind on VIXpiration this month. We did not have an unwind on OPEX this month. We are now coming into a huge report. We're also coming into huge reports, ER reports. We're also coming into FOMC. We're also coming into the last FOMC for Jerome. We're also coming into month end. We're also coming into rebalancing. We're also coming into all this moment here, all these other reasons that are stacking as to why we should roll. And this guy here is trying to push on you a narrative of doom. I do think that 3 to 4% or 5 to 7% correction is there. The question becomes when. And is it the same as Volmageddon? Probably not. But is there looming like a big corrective move here? Yes, there is. But I think we need the trigger for it. I think we need like the street to sell calls when they're a little bit juicier. We need that tease. We need that demand. That demand is like sweet. Day traders love it because they can run up into it and sell calls to you too. But then call sellers know that a group of those call buyers, a portion of those call buyers, those degens, believe. They believe that we're going to go up, slam into 720, 730, then 740, then 750, and there'll never be a pullback. And what really happens is we break that volatility, plunge, and like on fire for a few days. If it's VIXpiration, it's like one day. If it's like OPEX or month end, it can be more drawn out, usually a week or two. But yeah, we all know it's there. I know that a lot of the market doesn't know this stuff, but you guys happen to watch this show, so you understand it. So this guy's probably pushing a narrative for a Volmageddon type event, in my view. He says, again, there's quite remarkable in light of today's geometric drivers. Blah, 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 blah. Hold on, crowd. Index volatility, i.e. the VIX, varies with the product of average single stock volatility and correlation. Low correlation can therefore keep the VIX low, even when average single stock volatility is not. Today, the VIX has fallen even as single vol has stayed elevated, as correlations have declined. But that leaves the glaring point of failure. A shock, either exogenous or endogenous would cause correlations, and therefore the VIX too rises rapidly, leaving stock prices more likely to fall in disorderly fashion. I'm going to give you 2 or 3 things on the top takeaway on this stuff. The VIX can rise rapidly, leaving stock prices more likely to fall in a disorderly fashion. He is unwilling to bring up spot up vol up, which he should, even though there is a likelihood of more likelihood of VIX up, spot down. Spot up, VIX up, like spot up, VIX, spot is price. I know there's probably one new trader here. Whenever somebody says price spot to you, they mean the price of, in this case, SPX. So spot being spies going up, or SPOOs, or NQ, doesn't matter. Qs, any of the major indexes going up, and VIX is going up at the same time. The conditions can be there for spot up, vol up, and the spot up, vol up doesn't take place too. That's important to note. Like, whatever conditions are ripe for spot up, vol up does not mean it's going to happen. It just means, hey, the conditions are there, and you should be aware of the danger of it, because you can get vertical. It's a very dangerous position to be in if you're trying to short. Now, we can also like be in the position of spot up, vol up, but it fails, and we move into like spot going up and spot going down, or VIX going up and spot going down too, where shorting is no longer a danger. But you have to be very careful when you're shorting that. When we move from a spot up, vol up potential to we're actually now spot down, or spot up, or excuse me, spot down, vol up. I'm saying VIX up, but it's, spot up, vol up. Now, in both circumstances, you can usually trade vol and not worry about if it's spot up or spot down with vol up. But the argument here comes from why is VIX as low as it is right now? This guy pretends that VIX shouldn't be under the low of 1447. I tend to agree with this guy. Maybe $12, but like the idea that we're gonna get, like, let's just show you this here. So here's VIX 9-day. Do I think that VIX should be down here? No. With the war still on, fuck no. Or the market knows more than we do. There's actually, if we were down here and like VIX was down and spot was up, I would think that we're not being told that the war is over. We did hit a low on VIX over here at $14. That seems reasonable to me. Now, whether we come down here and we coast up and spy or SPOOs, or do we make the trip higher? And this is what Charlie McGilligot was getting at the other day, which was, do we get even a spot up vol for a little while, right? And then we're down here, and then we're getting the nasty vol. This is telling you expect a roll, but the market's going up right now, isn't it? So if we start ramping early and start breaking above 720, I would expect spot up, vol up. That makes sense? So we are in a spot up, vol up type situation here. I agree, and I think Miguel got made that pretty well known this week. We could also do something where we're grinding higher and we're kind of like fading this, and then if we're at 720, 725 maybe over here, and then we get the bounce higher on VIX. That would not be spot up, vol up. But I do agree that this is here. The only thing this guy is not telling you is the spot up, vol up. And he's telling you VIX will rise as we head into the rest of the week. puts will gain vig, even though the market's going higher, or at least fix will. And to expect some doom. I think I argue that he's not accounting for the mechanics of options. The mechanics of month end, the mechanics of taking profit and the window dressing, the mechanics of wanting to roll your call selling higher than we are right now. I think it's dangerous. I know what they want, but they're not going to get it. Let's watch this closely here. Five-minute trigger coming up to support right now. Your whole world here is this. It's this 5-minute momentum going higher, and it's this half-an-hour momentum making its way up here to push this up into the close. That's all we're waiting for right now. So Volmageddon, we're just waiting for one shoe to drop on Volmageddon. No. The answer is no. But I do want to address it here because I'm sure that it's being talked about in public. I do think that if we go up there, maybe you could call it a Volmageddon, mini Volmageddon, but I think you'd be rejecting that 720. So it'd be like 7260, 7250, 7200, and then we roll. And then you call that spot up, vol up for a normal pullback, I guess. What's the other one that I've got? I think that's it. I've gotten through them all. Okay, sweet. We're going to move into earnings now. Note, if you are a member of our community, if you're a pro trader, you already have all of these expectations. You have them every week. I track all of TMT for you regularly. So if you want to know like what are our earnings expectations, you already get them from me. You get them every week regularly. And what my expectations are week in, week out, day in, day out. You can't read? I know you want to see them, right? I got them here. I got the sauce. We're going to stay late today. So the thesis for me right now is that we trade up into these earnings. And whatever awesome sauce comes from that ticker, people are going to take the underlying before you get to it on the next day. In my view, at least, leading up into all of this doom shit. We've got doom shit like starting Wednesday. It doesn't end until mid to late May. May 14th, the doom stops. They got a whole book. They're writing a whole new fucking book. It's called like the Great Bear. It's like bear fables and fairy tales, and it's like Bernstein Bears. They write the book every month or two, and they get the new playbook out, and they go, okay, here. They go, I'm going to read you an 80-page fucking synopsis as to why the goddamn market should fall to burn to the ground. So they get the month of May. They got half of the month of May. So my take on earnings at this point moving forward is you should expect generally great earnings out of tech. You should expect the market to go up into their earnings in general. But you should also see profit taking into these earnings, and then the street looking for any kind of reason for the market to pull back to buy a dip in May, a monthly low in May. And so the bigger question becomes, are we defending? We're defending 700 and we're defending 6,800. We know that, right? 6,800, 7,000. Basically, the street wants to get down to 6,800. So they're going to tell you these stories like 3%, 7%, 4%, 10% down. And the more we go higher into, 720, the more the correction should be from their perspective. What we're really doing here is we're closing the fucking door in these bears for the summer. And the higher we go, the more angry they're going to become at what the back test is. Indubitably. The back test, like going back down to 67 gets a lot less likely the higher we go here, right? Fairly easy to surmise that. We got an equal leg coming up right now. Watch this closely. There comes the equal leg. Now, I'd be willing to trade this higher. But what I want to see, watch this closely. If you haven't gotten out yet, you want to get out here. What I want to see to take this higher is a high above this yellow. And then we can buy this back test for the handle right here. We can look to buy this one right here if we're going to crank into the close. Okay? We don't have a lot of time left, so we might not plunge. But we want to see that first if we can to take the trade. To chase this early, we have to see this work be done first. Okay? I want to see the new high. Still not seeing it. Still short of a new high. That is an equal leg. It's very bullish. You gotta watch this closely because they're watching pennies over here. This one right here. We didn't auto sell that one right there. See that tick right there? That's a bullish tick right there. You could theoretically take that as the handle. We did get the new high in SPX, by the way. Oh, yeah, you just got it here in SPY 2. That's bullish. The new high right here. Need coffee? God. It's a hard trade. Theoretically, we should start ramping here again. This tick right here is saying they're going to do it early. That tick right there. No, this tick. Wrong tick. They did it by a penny right here. Should be a quick rip up higher. They're not waiting for all this to come up. Start ramping right now. It's a very dangerous trade because if you get caught in it, if you get sucked into it to the downside, you got to stay long. It's a hard one to trade. It's very risky. You can get long here. It's just you have to diamond hand and then maybe DCA. If it goes against you, you have to add. You need money to trade this. Me too. I was looking for. They're gonna try to ramp it early. I was hoping for the equal leg that stopped here, and then got sent back in to pick up more, but it didn't. It poked its head up. It was only a few pennies. If you missed it, if you not missed the trade's not started yet. If you missed it, we went too high. Means that there's nobody here. There are no sellers here. And they try to ramp this fucker early. I just watch this closely here for a minute. Get rid of all this. I can leave this here. This might come early. We go right up here, slam into this one, and then do it over here later. Maybe there'll be some news. Well, I got to move some stuff over here. I'm trying to see this back over here. Freddie, I would say if you're trying to grab this push higher, you can. Just stay in it. You can't get shaken from the trade. Stay in the trade. If it rolls on you down, you have to add to the trade, so you need more money. If it breaks, they're trying to get price up here. I think from without you being in the trade. That's what it looks like. If you want, I'll say on public if you want to cut it at some point, I'll let you know if you want. I don't know if that explains it better, Freddie, or not to you. So like if it rips, if we green bar here, you just like, I didn't need that trade. Or if you get caught in it and it doesn't squeeze, you're stuck like having to DCA down here or get something closer in the money or something. And if it runs away from you, you can't be hindsighting about it. If you get hindsighting about it, you're gonna be mad. So you can like open zero dates here if you want, but you have to hold them. You can't be shaken out of the trade. You gotta be willing to lose all your money. You can FOMO in this, or you can get 0 dates here. You just have to like let them burn, or be okay with it burning. Money to lose. I think a lot of traders here would let it go though, let it squeeze, and just be waiting for the next opportunity. It breaks rules here. The one thing here is that there's a this tick over here is higher than it should be for the pullback. It's implying of a more squeezing going on early. So you'd see something more like this. And the implication is, go over here. So this is what everybody wants. Where's 1600? Right there. Everybody's looking for this drawdown to grab, right? Basically, right? Sweep, bump it up, bump it up. What this is implying is that small tick right there, that tiny penny right there, is implying that you're going to pop up. And then maybe that trader is waiting here. So you reject that. Then we break out over here. Now I'm going to show you the problem with this. There is a problem here. So you're going, bang it up. Your half-hour trigger is somewhere down in here. This is what this is implying, but this is normally the trap. This is how it gets trappy, is that you get the tick and then you're like, I got to stay in for this. But then they plunge you down, take you early, and then it's over here. If that makes any sense. So you just gotta, like, if you're gonna take that, you have to be willing to lose it, and you have to be willing to DCA down here. If that makes any fucking sense. I don't know if it does or doesn't, but roll out here. Let's do it like this. Closer to that. There's your power hour over here. What's going to happen? Somewhere right there. And then you actually hit your target up here.
NYMEX WTI crude June futures settle at $96.37 a barrel at $1.97 or 2.09%. NYMEX diesel May futures settle at around $3.97 a gallon. NYMEX gasoline May futures settle at around $3.49 a gallon. And NYMEX natural gas May futures settle at $2.55.
This is the no lube zone. Yeah, I don't know why I'm yawning so much. I don't sleep enough. What did I do last week? I'm trying to think, why am I so tired? I was out with my buddies here in Detroit. We were talking about kids this week. Because last week I did track and field. I did track meet.
Up 0.03%.
I went and did track meet. That didn't end until
Last flat at
like
around $1.17.
that didn't end until 8, 9 at night.
The US dollar edges higher versus the Swiss franc, last up 0.1%.
Then what did I do? I'm starting to forget what I did. It's all a fucking blur. Like I did track meet, then I did. What did I do? Oh, that's what I did. I gotta remember. Okay, these are what I. Are you guys all dads out there? So this is my work. This is my work last week. I did track meet. That shit was till like 8:39 at night. Then I did, as a dad, I did this. Not mommy, daddy. And then I did theater. That shit was hours too. They told me there was an intermission. As soon as they told me it was an intermission, I knew I was fucked. I love theater, but I'll say two things in the theater thing that I did with my daughter. This is my youngest, by the way. You don't ever leave the youngest one behind. You always you do the same thing for the youngest you did for the oldest. So like, I did theater. My daughter was like, "Can you come to theater with me?" I'm like, "Okay." And it's because she's involved in arts. Now she wants to go to voice lessons and acting lessons because it's adjacent to what she does. It doesn't matter. So I was like, "Dad, I want to introduce you to this." So I went and did this with her. Then I took her to do volunteer work. So she's in National Honor Society. Is my youngest, and she has to give to her community. I don't know I know they changed the rules for National Honor Society depending on when you live, but where I live, for National Honor Society, they want you to do selfless service. Selfless service. And the reason you do selfless service is because you are an example for your peers. You want your peers, like your people that you're friends with, you want to be helping your peers out, helping people in life, and leading by example, right? So she volunteers, and we do volunteer work. So I did that last week. Why am I bringing this up? I don't know why I'm bringing this up. Why am I so tired? I'm so tired because I can't get it all done. I was out with a buddy though, and I was out with a buddy this weekend, and I was making fun of him because he was saying he was like my ex-wife needed this, my ex-wife needed that, and I was like, so you ran errands for your ex-wife, and then she told you what to do, and I was making fun of him, but he was like, I was like, do I have a punchable face right now? He's like, yes. He's like, I want to slap the shit out of you right now. And then I switched. So I was like, well, look, I had to do this for my kids this week, or my youngest. I was like, this is what I did for my youngest, and I would do it for my youngest whether we were married or not. I would do that for my wife said, you need this, you need that, my ex-wife or whatever. My point to him was that you do this no matter, even if don't get mad about your wife no matter what your ex-wife does or says or treats you or acts or whatever, you just try to be the best guy you can. You try to support your kids as best you possibly can, as much as you can. Sometimes you can't. I get it. And men are usually get fucked in divorce anyways, but it's hard. You have to tell a man it's okay. I do this for my kids right now. You're doing it for your kids after post-divorce. None of that should change. Whatever you can do for your children, you can. And I realize some of you can't. I've been there too. I've been in times in my life with my kids where I can't take care of them. I've had Fridays where I've had moments in my life where raising children where every dollar I had on Friday goes to my children. My house, my bills being paid. The idea of us enjoying a weekend was like some fucking pizza. Literally. I've been there. Those are the hard years. They get better, I promise, as you get older. They get better. You catch up. If you keep doing that, do whatever I can, eventually at some point you win. That's the key. You just do the best job you fucking can. This is a message, I guess, to guys that get divorced or whatever, or being tired, or that kind of stuff. So you just work harder and harder and harder as you get older. You sleep less and less and less and less. Then you wind up like me, and it catches up to you, and you roll over and fall off the side of a wall somewhere. Then you try again. Just keep doing it. Keep doing it. And I think the same thing applies here with this. We're going to try to squeeze up here, roll down, and then we'll take the dip. If it runs away from us right now, just let it go. Wait for the next setup for a flush. We get enough afternoon flushes that it works out better for you if you're waiting for the flush, is my point. If you're long right here in 0-8, you're going to be given an opportunity to get out anyway, so we'll watch this closely. No, I don't know. Do women get fucked too? Especially if guys are shitbags. I don't know. You know what? I wish men had more of a safety net for each other. They don't, in my view. Like men are expected to have like they are the safety net, right? Even like my wife, dude, like all our friends and family, they're all supportive of each other. They would never let my wife fail in anything. Dudes aren't like that, I don't think, oftentimes. They rarely support each other. I try to be like that to my best friend. Yeah, no, I get it. I get it. I get it. I get what you're saying. I get what you're saying. That's all relevant too, though, too, right? Some of that's relevant stuff. I always wonder about my own kids. I'm always like how like what's the relevance of how bad your parents were? Like I'll read like not stories, but like go on Reddit and stuff and read people complaining about their parents, and I'm like, yeah. Oh yeah, safety net. No, there's no safety net. I think I am the safety net. I think I'm the only safety net. I'm not allowed to have a safety net. You know who's my safety net though? I got good friends. Like Joe Donut's a good friend of mine. I got good friends in my life. This other guy, I'm not gonna tell you his name. Some of you guys know most of my friends. I've got good friends here too. I got good friends inside the community. Like in real life friends that protect me. Winky, John L. Believe it or not, John L. I don't know if you guys know this or not, but I really, truly love and respect John L. He's like my grandfather. Keeps me in line. Binky, Winky, Doug on it. Good local, real friend. Daz, I know him in real life. 80, she's out there. David AMS. They're all real friends. All people I truly trust. Try to surround myself with guy friends that are supportive, not trying to tear me down. The other thing I ran into too when I was younger was I didn't realize that my father always told me it was a rat race, but I didn't realize what he meant by that. When I was in my 30s and 20s, I was never the ruthless guy. I was always like, yeah, come along, man, we'll do this together. I didn't know that they secretly wanted to destroy me or whatever. I didn't know that until I got older. I'm grateful I didn't take part in that either. My dad, though, I didn't know that everyone was gunning for those positions. I just was like trying to enjoy life and get through my profession and stuff. I was never in the rat race. I was in the rat race, but didn't know it. I'll say it better. I never acknowledged it. I never felt like I was racing anyone else. I always felt like I was doing my own thing. I never cared about what anybody else was doing. I only cared about what I was doing. And that's impacted a lot of my life. Not caring what the other guy's doing. But I never realized how many men were doing that. When I look back on it now as an older man, I'm grateful that I never took part in it. I really am. I lost friends over that too. Oh, there it is. Oh, there it is. Come on, just do it. Flip it up there. Make sure you have an upside stop. If it does squeeze, if it might not, but if it does, you want to be able to take the money and run quickly. I think I would have went back to those friends and told them. I think I would have like gone back and said, it's okay, you don't have to try to beat me. We can do this together. I had friends that tried to burn me down when I was younger in my profession. I've had them call back and apologize, and I can't be friends with them ever again. I realize what they were doing now. Not everyone's like that, though. My friends, the friends that I've kept as I've grown older, like the ones I've been friends with since, They're all good people. I love all my friends. I love them. I'd give them the shirt off my back. I'd give them everything I have. Save their life if I had to. I cherish that as I get older. As a man, I cherish it. I think a lot of men go through life without that safety net, any kind of safety net. I think society does that. Whether it has to be like that or not, I think society creates that shit. And I think women have done a great job with creating their own safety nets, right? Men suck at that in general. They tend not to protect each other. There's like bro code and stuff, but most men think they're on their own. Or that's at least what they perceive. And they can tell a bunch of other shit too, right? Like could be like mental dysfunction and stuff. From men not sharing their feelings or their thoughts or pain or when things are bad and stuff. Might be a societal thing. Yeah, that's a good point. You just said you find out who your friends are when you hit rock bottom. That's a fair point. That is fucking true, isn't it? It's a good point, problem child. You find out who your friends are when you hit rock bottom. That is a good fucking point. Or when things aren't going well for you and who steps up to help you. That's a fair point. Roger that. Yeah, I didn't realize that. I cut a lot out too, but I didn't realize how extensive it would be until I got older. Remember, this could be the tease here. We're not going to squeeze, still dump you down, then we'll go up. Watch this closely. Do you have to stick around? Like I was trying to get to earnings today, and I haven't. Let me start looking at these behind the scenes here. Okay, I'll try to make some quick things for you guys. All right, get a pen and paper. I'm gonna make this rapid fire here. I'm bullish on CLS earnings. CLS. Bullish on their earnings today. It may be a situation of taking the money and run, but I am bullish. That's CLS. Charlie Lima Sierra. Rambus, bearish. That's RMBS. I'm bullish on CDNS to trade a new high at 352.5, but then it's going to come back down. I don't know if you can hold it into tomorrow. This is CDNS, bullish. I would prefer to buy a dip on this one. There's a cross coming up on an hourly trigger, on a weekly trigger on CDNS, so I would like to see the new high at 352 and then a reversion down to 300. Watch out for profit taking on CDNS after the bell. It'd be worthy of a squeeze to sell calls on, too. Damn, I'm bullish on all this shit. Alexandria real estate could potentially close a gap at 45.27. Bullish on it though to trade $50. It's a nice bullish setup here too. That's ARE. Alexandria. I like Bro to trade 65, clean that up, and then take off. Bro looks BRO. Brown and Brown. They look like they're gonna dump, but then you want to buy the dip on that dump. So BRO I like on AH dump to get long. Anywhere in the low 60s, I'm down with it. Maybe it's delayed. LC. LC, I expect that to dump too. LC, dump it. Close the gap at $15 and then take your trip. Keep an eye on that one too because the daily trigger is crossing the weekly. It has a lot of momentum that's bullish but unsustainable. In its current form, it's pretty high right now. I'd like to see the dump and then a rip. I do want to see you trade $20 on that trade on LC. Still bullish overall. NUE, Nucor. Nucor. Fuck no. Sell the fuck out of Nucor. Hold on here. Sell the fuck out of Nucor. Bearish. I'm bearish as fuck. It might take a few days. There might be a rip after the bell, but I'm still bearish on it. They're trading 215 right now. They'll pop to 220, 222.50 and a dump. Look for a high to sell on Nucor. I like Crane, CRANE. Make sure you have the right company. It's ticker symbol CRE. I like Crane here. Overall, these reports all look good for the close. I do not like CTOS, Custom Truck One Source. Maybe to 950 to sell. Maybe sell 950 on CTOS. I like them pulling back too. They might trade 11, 12 bucks on today, but I still like them lower. I think their trade's already begun. I can see CTOS is looking to trade $11, $12, but I don't like their 30 minutes velocity at all. It looks like garbage. Their hourly looks great, but the half hour looks like shit. The daily is a little long in the tooth. I would prefer to buy their daily velo on a major low. Or maybe I should say there's better trades. A few of these look like take the money and run. Same with AMKR. Sell the fuck out of AMKR too. They're at 81.50 and a high. Maybe they trade 82.50 and then they sell. I'll look at UPS for the morning. UPS is bullish, pop and drop. Trade 115 and then sell. If you're trading options on UPS, you want to come back. If you're long under long, you're probably fine. UPS up in the morning, but it should sell. Coca-Cola. Coca-Cola, I think, sells, but I am extremely bullish on it. Let's trade in $76. I'd like to see it sweep the low one more time at 75, maybe. But I am bullish on Coke. They're just getting started on daily velocity. I want you to look back right now at January of 2026 on Coke. Look at daily velocity on a 30-minute basis. Look at the daily velocity on a 30-minute basis. Bullish on Coke overall. Bearish on Corning. I want to see one more run down here in Corning. I'd like to see Corning trade 160, and then you can get out from underneath it. I'm bullish on it overall, but it's a very long in the tooth. It's still, it's a tough one. Let's look at this one really quick. I still like it lower. This is a funky one here. So this is Corning. It seems like they've built it enough that they can do this and then down and then the move. Just this is your cup, this is your handle. Assuming that everyone's thinking it's gonna be this. And they might allow that. Like they might allow this, like they're allowing this to happen. We're priced to perfection to trade this, but even if you trade that, it's down. It's 1, 2, and 3 in my view, and then you get the real breakout up here, the one that you're looking for. There is a little built-in in here for Corning to accommodate this, but I still like the trade lower. So I'll show you where I would like to take the trade. It's somewhere. There's your halfback right there. I think that's fine, but I would still like the idea of this trade better. I like the idea of buying the second one right here. So it's better to buy at like 155 in my view. And I realize some people are gonna be like, "Oh, but Cap, you missed the whole Corning trade up here, Broseph." But I do. I like it lower over here. So this setup right here is similar, right? Pops up, they take the money and run on you. And the real trade is over here to get up and away.
Crude futures settle at $108.23 a barrel, up $2.90 or 2.75%.
Come on here. Just a note here. Just watch this right here. Do you see it? So this is the leg right here. See it? Get up here, trying to scoop ourselves up. We are above right now. We're not coming back down here today. We're trying to go up. Take out that prior high right there. This is 715.38. Give me one more quick second here, guys. I got to speak to my daughter. Give me a second. Oh, yeah. So I got some good news. I've got good news. I got spared robotics today. I don't have to go do robotics. Yes. I do not have to do robotics. And we have clarinet afterwards. Do I have to do clarinet or no? What time is that at? Okay, so I don't have to do robotics and I don't have to do clarinet today. Did I do all my good daddy deed stuff last week? Am I being a good dad? I got to do, I think I can stick around for after the close today. And what we'll do is we'll wrap up the rest of these earnings. So I just looked at Corning. I'm going to give some top line on Spotify, Ecolab, Galaxy, GM, Hilton, AB, and Centene. And then what we'll do is after the bell, I'll start doing all the cool shit like Robinhood, Visa, Enphase, SoFi. We'll look closer at Microsoft, Amazon, Meta, Alphabet, Ford, Qualcomm, whatever we can get through here. Caterpillar, Apple, Reddit, Rivian. And we'll also look at maybe some Estee Lauder and stuff and whatever your requests are. That part of the show is going to be private, though, for members. I'll do one freebie. Give me a second here. Let me look at the big boys and just see if I can do one freebie for free members. And I know someone out there is going to get stinky and be like, he ain't doing these for everybody. Hold on a second. Let me just look. Well. Oh, I wish I had bought that Microsoft dip. I wish. Did you guys, anybody buy that Microsoft dip? That back tested fucking the daily trigger near perfect today. That might be the one that I do. Give me a second here. I'm going to look at them all. Nope. We ain't doing that one. Microsoft's still looking like the best one right now. Let me go look at this one over here. I'm so fucking good. Look at these goddamn charts that I've charted for you guys. My God, I'm so goddamn good. Like, fucking Meta's near perfect. I mean, how do you even fucking... I've charted these for you already. So goddamn good. You want to see what I got here for, what am I looking at here? Meta? I mean, just look at how fucking perfect that is. I mean, I don't know how much more perfect you need. And oh. Hold on here. There's Meta. Let's see this one here. A little bit more room in Google, not much. Look at a few others in here. That's not helping either. I'm looking for something that's like unexpectedly going to be good. Ooh, Apple. Apple looks like it wants to dump a little bit too. Hang tighter. I might find one. We got time. Damn, Robinhood. Robinhood, you're going to get ground down a little bit more, I think. If you're a Robinhood trader. Keep this up here. What a NPH. Nope. What about QCOM? And that's near fucking look. I mean, look at these fucking things. Like, here, I want to show you some cool shit, guys. Let me move this. I'm looking for like one trade for free members. This is Qualcomm. Look at that near fucking perfect fucking dip buy for Qualcomm. It's fucking near perfect. This was by Qualcomm. Fucking squoze balls off. That trade's dead. Ford. You guys remember this? Sell on the money calls somewhere up here for month end, then sell middle of March for when May option chain opens. Discuss with community before trade. The Ford's already done their thing. This could be dumpy though too. And then up. That ain't help. I'm trying to I'm jumping through all these stocks for the rest of this week, and I'm not finding anything that stands out like a sore thumb. I kind of like CMG here if it can go lower. Keep that there for you. I'm looking for like a clean trade here, and I'm not finding a single goddamn one. How about Lily? Ooh. This one's juicy as fuck too. Lily's almost ready. It's being accumulated on a daily basis. I'd still like to see it go down a little bit more, but it's almost ready. Let me just look at this on a day really quick. Oh yeah, fucking Lily is almost ready. You guys ready to party with Lily? It's not quite party time with Lily, but it's close. And now it's still selling. We got to look at Lily at some point. It's complex, but there's money in there. Let me look at a few others here. Hold on. Yeah. I think VST is going to be a disappoint. CEG. Don't like that one either. I think CEG gets shanked, and I think VST gets shanked too. I mean, I like CEG. I don't like their hourly velocity. I think they come down, sweep that squeeze, and then they go up. Like here. Like this is CEG. I'm better to buy this down here. It might run in their ER, but I would prefer to see it come down, then go up. And it's only because of the velocity. It's coming up. I don't like it because of this. It's bullish. I'm not saying it's not bullish. I'm saying is that this right here. Let's see what it looks like right here. So this is all bullish right here. But what I want to show you is this part right here. You see this part right here? It's like garbage, then you move, garbage, then you move, and then garbage. So I'm thinking the same thing, like you'll either get no move or a dumping, and then you move.
Mulling a 1-year rent freeze on private sector homes.
I'm not like, it's not that I'm not bullish here. It's that I think you're waiting for the move. This is CEG and then VST. Is it VST you were looking at? VST, I'm having the same feelings. My thoughts and feelings. See this one right here? I'm bullish on this. But see that hourly? Way toppy. And then you see this daily is getting I don't like that. I don't like this topped with that. So my other question on this one is, do you get like disappointed? They sucked. So then like this. Something like this. This ends up becoming your one. You could even argue that it's like this. Okay, so you get your leg.
Interested? We have posted the article by
1, 2, 3.
for those interested.
There's your second leg up here to 175. And then we don't know about this one up here to 82.5, but I still like this better to buy down here. Because this is almost done. You can see it right here. This is your first leg right here, or this is your prior high. Doesn't have a lot more to do, does it? And this here you could theoretically say it's like this. There's your halfway. Halfback trade. Just to back test and confirm it. There's your daily trigger coming up. Same kind of a thing. It might run, but I still think it's better to buy after. It blows off some of that negative this blows off that negative velocity. I'm not saying it can't squeeze here. I'm just saying if it was earnings season with options, bring it down, and then you get your move higher. I'm better to buy on this one at 162.04. Try to see if there's anything that I can find in here for the regular watchers. Microsoft is probably the best one. MSFT has the best velocity of all of these. So we're going to look at Microsoft as a group. Yeah, keep doing it. Keep going up. You know you have to go up there. We know you're going to do it at the end of the day. We know you're going to do it overnight. We know you're not going to make highs and cash like we want you to. Come on, Spoos. You don't got much time left, bro. You got like another day, brother. Before the doomers enter the scene. Dude, like the Microsoft dip, dude. That was a no fucking brainer. It really was. All right, ready? Here's trade for you. Just watch that SPY go up into the bell, okay? That's all you need to know about. It's going up into the bell. I'm going to give one for free here. Now, we're going to talk about Microsoft into this close. Okay, this is Microsoft. There's a bunch of information here you need to know. This is a beautiful wick right here, right? This is still relevant. I'm shocked that none of you would have bought this today. If you had the triggers, you knew to buy this fucking drop down here. This is a gorgeous, gorgeous drop. It shows how supportive the market is of Microsoft right now. Now, there's something in here that's probably unknown. Not if it's unknown, but it's probably not done yet with consolidation. And I think this is going to be ongoing in here. And this is going to be something that I think Microsoft here is going to be generally what to expect in the market. Generally what to expect in the market. And I want you to look at like the 400s here. And I want you to look at 390. I think this speaks to like the rest of the market here. So we have a Microsoft earnings on for what I have for information in front of me, it says it's on Wednesday after the close. What's fascinating up here is there's supply. Do you see it? Right? It's easy to see. There's supply for 440, right? Here. So that's easy to see, right? As you are approaching 440, there's supply. Fuck, seriously, stop. God, kill me. And you can also see the weekly triggers right here, right? This is weekly pressure to go down. Everyone's looking for the breakout. They want to see Microsoft go moon, as well as the rest of them, right? If I had anything to say about Microsoft, let's look at this high right here, 433, 440. I think this trade speaks to everyone's saying that, like, what are we going to do here, right? So you got FOMC, bad data, blah, 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 blah. We have demand, so it's not like we don't have demand. We've got buyers. They're here. But if we're like smashing up, let's say, into this 40, and the real trade to break out is somewhere in here, something like that, or it's a series of distribution up here. I'm drawing that a little shitty. You know, it's where you're like, there's 36, there's 37, 38, and 40, maybe even 42, but in reality, it's something like this. And this is probably speaking to the larger market. 90s down here, and the real escape is here. And I should have drew this like this. The real escape is likely less dramatic when you escape. And I think this speaks to the market right now. And how I read the Volmageddon trade to you. And let's just look at this really quick. It's like, oh, bro, Volmageddon, you know, that's 12%. You know, the more we go up, the bigger the Volmageddon is. This is 9%. This right here in middle of, like, we're like coming up here, and then we're flattening on the rejection. Like flattening on the rejection, right? So daily trigger's pushing up, then daily trigger's moving down on the rejection. Down here into middle of May, and then you get the escape. Some of these other tickers I was looking at look the same way. Not all of them. And, see how supportive this is? It's still supportive over here, but it's time, not it's time more than anything. Let's look at this closer.
US Treasury Secretary Bessent discussed the risks from overcapacity production with the European Union, according to a statement.
This is what I want to know right here. there. And like this zone right here. See this zone right here? This is where the pain is gonna be without ever hitting it. Weak. So 390. Like see, like I want to see this get. I don't care about that either. This is gonna be a on a this is only gonna be a nope. Don't even need to put that in. Get rid of that. Doesn't mean anything. The only thing that matters here is this weekly right here. It's the only thing that matters. No, you're not getting any of that. No, you're not getting any of that. They're going to tease you with that. What's up there, Big Poppy? What are you doing over there barking like or burping like that? You sound like the fucking dog from Christmas Vacation, bro. I love you. I probably shouldn't be feeding you all that food. This is the weekly. That's 440, no? And this is it right here. You can see it. Where is that big gap up here? There it is. This is what everybody wants. Everybody wants to fill that gap right there. This is the fucking dangle up here. They're dangling. Okay. So here's the giant gap that needs to be closed. Can you see all of this out there? This is where the funky comes in. So the idea here is this is what we're going to do. Right? On Microsoft, I tend to disagree. I tend here to think what you're going to do is you think you're going to go up there and close that. It's so juicy, right? What is that? So fucking juicy. 12%. They might get it. If I had to guess, though, it's more like, you see that right there? See this right here? There's this half. We haven't taken that half yet either. Let me look at this on a 30 really quick. This is good. This is a. This looks like it wants to do this and then this, and then that goes up. Their earnings are right here. So this is the freebie. Three. Be something like this. Slam up here, slam up there. And they might even give you the 42, 50 right there. But here's the problem. I think they're going to plunge you down. Somewhere right here. Let's see if I got this right. Crater. And then you're going to fight all this. Nope. That's the May 18th. You're gonna fight all this. And then that's how you get out to trade that over there. And this is what I want to show you right here. Right there. We parked right in there. It's going to get there quicker, but we're going to show it like this. Pop, down, 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 down. And they're not going to let you up. To trade this into June, July. So there's Microsoft. This is what I think happens to Microsoft. I think you're better to buy Microsoft at 390. I think you might get 342.5. Now I could be wrong. If you wanted to do like, like week long calls or something that are dirt cheap, or maybe Friday, 0 dates on Friday, maybe. But I'll be honest with you. If you wanted like some Friday 0 dates for this big squeeze job up here, I can see it. Like, I want calls. Spies up here into Wednesday. Spies trading 420 or 720. I keep saying 420 because I'm fucking marijuana. But then I can totally see like spoos up there with Microsoft, and then there's your shank. Everyone's fucked. And then the real trade to go close that gap is farther out in time, into May, June, and July. I could be wrong in this. So this is what I've got, though. This is already done. This is already done. We only have to take this one out right here. There's one more over here. I don't know if I have that covered. Yeah, it's closer. It's up here. It's somewhere up in this. There's like supply. There's definitely supply up here. So you got like sellers, pants on fire, sellers. Like it depends on what your poison is here. If you're looking for the big trade, it's over here. In my view. So I guess if you're gonna do Microsoft, and be like, oh, boom, Cap said it was going down, and it does this thing right here. Just make sure that you're, cheap calls. I would even do that on the bell. If you were gonna exercise that, no matter how much they cost, I wouldn't be doing it until the bell on Microsoft on Wednesday. Like something dirt cheap and way out of the money. And have to be willing to lose that trade. You have to be like, oh my God, it burned to the ground. It's my fault. If you do that, I'm fine with it. If not, the more than likely trade here is a fake out in here, and just like a complete grind. You can see it right there. Fairly easy to see. It matches up. Now you're like banging in here, banging, and it's still a dump. You know what I'm saying? Even with these buyers here, because they'll be back over here. There's the pain trade for those buyers right there. I mean, look at how long they're waiting. They're long here to print down here. So this band of buyers probably is not looking for this print. They're probably looking for this print farther out in time. I do agree that anything down here at 401, 398, 390, 150. Maybe not that low. How about 392.50? Closer there. I think this is a good buy down here, but this is a machine buying, right? Any of these over here gets you the print either here or here, but if you don't have the chance to buy these lows, you're waiting for it to come to you. I don't think that this imparts it's going to print right now. It's only, hey, it's going to print now or later. But I still like the better trade of accumulating this down here. For a much farther out in time trade. Make any sense? This is the freebie for expectations. And I think Microsoft here encompasses this pretty well. I'm going to assume that they all look like this. But there's one caveat. Microsoft has the best velocity of any of big tech. So if you're going to bet on this trade on these other stocks, this one has the best chance of squeezing up here now. If there's one that could close the gap, it's Microsoft. So just be aware that when I do all these other trading, or these other, Meta looks good too. Meta looks fairly good. I just don't like their Velo right now. But of all the stocks that are looking for the bull trap in here, this is the bull trap. I dunked on you, bull. If you want to get long here, more time on it. If you want the best chance for it to squeeze, it's probably Microsoft, even with that bullshit news today. And I still like this trade better down here. Like the idea of following these guys. This is where the smart money is. Smart money is here, here. They're going to be right in here. So for me, it's down here. But if there was a caveat to this, it would be that Microsoft has the best chance of all big tech. Their velocity looks the best. Does that make sense? You've been in a leap for Microsoft. Did I just read that right? If you're in a leap for Microsoft, your target for this year is 520. Anything over that is like 520 is the target. Whether you get a cupper handle or an abject rejection to trade like 560, 602. If we start doing the blow off top, you're going to get it. 602 is your target if you want to know. But that's end of the year. I don't know if it's summer. I don't know if they try to do like the bubble popping in fall. Or if it's like springtime. But they are ramping the bubble. So you're hot. If you're looking for like extreme high for your leap, it's a 602. If you hit it, get the fuck out. If you you want to hear it? So it's right here. You want to show it to you? Oh, bring all this back here. Okay, ready? It's over here. Now here's where you close the gap right here. Let's call this middle of July. Shit. Oh, no. Don't do that. Hold on. All right, fuck it. We'll just draw it again. Put on the same thing. Now, what I want you to watch is this right here, okay? Here is your trend to get there. It's right here. This is all wonky right now. It should be up here on this one, but we'll leave it right here. It's good enough. Close enough. You have to close this out right here. So the assumption here is that you're going to go and do this for the summer, right? This is your summer trade. You'll reject this, of course, and then you'll likely put a cup and handle in somewhere in mid-July, whatever. Get the high, right? That's all you're looking to do, get the high. Then you don't know what's going to happen in the fall. We're going to assume here that you're going to get some kind of a, doom and gloom. And they're going to tell you how awful everything is. Maybe they cut you down here for a minute. Maybe. Just to make you think, but you still need the double to go down. You need the new low to go down, right? So forget about that doom for right now. What you're going to be doing is looking for that nice handle down here. Into September, dicking around, all the usual scare, panicky with the one low, maybe. We'll come back up here. And then there's your cup and handle. There's your, knock that fucker out right there. And this is really where you want to come in at the end of the year right here. It's like 540, 560, 520, somewhere in there, like right as you're approaching this end of the year. And then, of course, your cup and handle. And, there's your 602 right there. And this is like March 27. It should go vertical. Now, when that is done going vertical, Princess, you got the leap? Who's got the leaps? Now, this is the idea, right? And how high does this go? Now you're on a double top that's broken out. Triple top, you know what that looks like? Triple tops, what happened to triple tops? Ask Eli Lilly what just happened on a triple top. What'd they do? They went vertical, right? Was it Eli Lilly? No. It wasn't Lilly. It was INTC, right? INTC did that. INTC, they had a triple top too. You know what they did? They went straight vertical. Now we're going to get into some big trouble up here. Like, I want to show you where the trouble comes in. So I want you to see this right here. You have it. It's just like this. Wham, 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 right? And we got a problem here. Do you know what the problem is? Anyone out there know what the problem is here? The problem is that
we get the markets on close imbalance.
Monthly is likely going to come up here. And it's likely going to come up here. And there's a problem there. The monthly should be close enough to the to this right here, that when we roll down here and we get underneath that monthly trigger, there is potential for the implosion of the bubble. There is a chance. The monthly will likely be close enough for the opportunity to pop the bubble. And it could get messy. Like messy. Not guaranteed, but without a doubt, it's like 27.
Imbalance S&P 500 sell side 145.
First chance of
buy side 360.
popping that bubble.
Dow 30 sell side 284 million.
One way or another,
Buy side of
whether that bubble pops or not, we're partying, right? We'll take that whole fucking trade away. That's a whole down year right there. Do you see it? Like, you want price in a recession? There it is. That's bad news. See it now? And this is why I don't like Microsoft here. Well, I mean, I like it, but maybe you do pop this in. You do this right here, man. It's gonna be vicious. Get back down there. Maybe we do. I think it's more of a scam, and we close it over here. I think that gap gets closed over there. That's how I'd be trading it, at least. I can see the want to close this gap up here. And you might touch it. See it over here? You might touch the gap over here, close a little bit of it, and then suck right back in. But your leaps are great. And if you can add to them down here, keep adding to them. Any chance on this stuff you're adding to that into the end of the year? You're going to get some other kind of bullshit panic over here. Normally it's like, erase all your bullshit over here. You got to remember that the market's going to try to fuck you on your leaps too. Like, you always, if you're a leap buyer, you want to be like, buy leap, add to leap over here. And maybe coming in and out of your leaps. You can be in a leap, take them on a high. If you get a squeeze, you get out of them. If you're in a leap and you see something like this, you get out of your leap. Then you look for the next entry into the next leap for Microsoft. Not that it's going to matter much. You're going up there, bros. That's where you're going right there. This is your 1. This is your 2 to back test. This is your 3, 3, 4. There's your 5. It's funny how that stuff just kind of falls, right? And this is the crux right here. Do you see it? Like this big, like weekly, monthly, like this whole thing right here is like buy central. That's why when you see the big wicks on Microsoft, like big wick down here, like they're just buying anything down here. Anything they can get their hands on it. And they don't care if they don't get this print here because they're going to get it here. You know what I mean? Hopefully that makes sense. That should be good. I don't think I need to show anything else here. What time is it right now? We got 7 minutes left. We squeezing up there into the close here? Let's go look. So there's Microsoft. If you want the idea behind, let's go over here and look at this. If you want to know what the expectations are into tomorrow on SPY, up. We've got good reports today after the bell. More grinding, more higher. Looking to buy dips on the half an hour and the hourly trigger. We're trying to trade. Listen to me closely here. Trade 7,200 and SPX and a rolling of call action into that, which could send us to 725, 726 briefly. I would assume if you were to ask a guy like John L, if anyone selling fucking calls is going to want to be up there the best price they can get to sell them. If I was a call seller right now, I would want some room to sell calls. So if I wanted room to sell calls, I would want to see us trading 720 to fucking 725, 730, somewhere in there to like start selling you calls. Otherwise, I can't sell you calls. I can, but it's not as good. And it's just like every pain trade on the upside and the downside. Oh my God, we can't go that low. We do. And puts are fucking at a premium, right? And they're selling you puts on a low. Like we're going higher. In my view, at least, but not that much higher. So up into tomorrow, maybe a drawdown to, if you're looking for a pullback tomorrow, it's 715. Rebuy 715, but not right now. On the open tomorrow, we'll be back testing all this shit in the morning. Now, if you are a member, I'm going to turn the show off at 4 p.m. I'm going to turn the show off at 4 p.m. I'm going to take a half an hour break. I will turn the stream back on at 4:30. I'm going to go through as many earnings as I can for this week. I'll do rapid fire, and then we'll chart this one out. Now, that Microsoft should give you this roughly the same idea of the rest of tech stonks and how they should act. But I'll come back on. My kids are gone. My wife is now gone. She's taken the reins from me, from my youngest. So I've got some free time. I'm home alone. So I'm going to get some lunch. And what I'll do is I'll come back at 4:30. We can do 4:30. Let's do 5 p.m. That gives me the chance to like eat. And I'll come back at 5 p.m. and we're going to chart out on a private stream. I'll drop a link in the market chat of Discord. And we'll look at the rest of this week together more closely to see what the expectations are. I do think if you're a free member, that Microsoft look is probably the look for all of our market. It's fairly representative of what to expect in the next coming days. And even with a squeeze higher, we probably need to talk about the other side of this in that stream, that private stream too, because we haven't discussed if everything does pop up there, what happens. it would shut the bears down in a way that has never been seen before. Just kidding. If all of tech were to go up there like that, it shuts a door on bears. It's going to be brutal because then it doesn't matter what the drawdown is. It doesn't matter what shit comes the way of the market. Like if that gap gets closed on Microsoft, like what are you going to ask for? You got to ask yourself as a doomer, like, is the doom now back to Microsoft at 390? You know what I mean? None of this is matching up well for the bears, in any way, shape, or form. So just keep that in mind. Like all signs here. Like whether it squeezes and then pulls back, or if it just goes up a little bit and pulls back, all signs still give enough room to bulls. You'd need to see everything fucking crater here. You know what I mean by that? Like, think about this from the doomer side. Like, let's look at this. So, like, what is a doomer telling you? You're telling me from right here, a 12% drawdown, you're telling me that's not enough for the market to recover velocity? I don't think so. If you squeeze this up here, how much do you want? That's 18%. Do you want 10% here, another 10% here? You want Microsoft down? How many percentage? You want that 10? I know what you want. You want that one right there? Blast that down? 20%? Well, you want another leg down over here? You want another 24%? I don't know. I don't know. Like, you're talking about, like, let's look at this velocity. Divergence, accumulation. Divergence, accumulation. Accumulation. Higher lows on weekly. Bullish as fuck here in the daily velocity on a daily basis. Bullish as fuck. You know how bullish that is. This points towards either Microsoft squeezing right now or Microsoft squeezing in the coming weeks. This shows accumulation on higher frames. You want to see what happened the last time this happened? Like for the bear case, I'm just wondering. Like there's a low there in weekly. You know what that looks? 2008, 2000, 2001. This is September of 2000. Already in a down move. Near finished. Back in accumulation again. And they're killing velocity in these corrections to get us higher. Like these things right here, these big down moves right here, this dispersion that took place last year in Microsoft, opened the door to like a whole new market for it to go higher. If this doesn't happen here, way is up. Higher frame accumulation. Okay. I'll be back. It's after 4 p.m. I'll be back at 5 p.m. I'll drop a link to the stream inside the Discord. If you guys want to watch this on free, you can. Cool. All right. Later. I'll be back. The stream didn't get on once today. I'm so excited.